a very present question. Question 3A, August 2024. Question 3A. We read the question. Superlight Investment Limited. Superlight Investment Limited. Superlight Investment Limited. Superlight Investment Limited acquired land from Wema Estate at a cost of 15,600,000 in the year 2019. Other incidental costs incurred in relation to acquisition of land. One is the legal fee, 462,320. We have commissions, 3,400,000. We have stamp duty, 312,040. We have survey, a figure of 100,000. Then finally, what you call land board consent facilitation. Then you're being told that the Superlight Limited sold the land to Express Limited on 1st May 2023 at a transfer price of 31,200,000. 31,200,000. However, Superlight Investment did not pay the capital gain at the time of transfer. Of the land to Express Limited. The Revenue Authority issued an assessment on 30th June 2024. That is a period of 1 year, 2 months at the lapse since the date of the transfer. Required. Compute the capital gain tax payable by Superlight Investment Limited, assuming that the company had paid on due date. The second, calculate the penalties and interest and total tax payable by Superlight Investment Limited if the company paid after 1 year and 2 months from the due dates. So we can get back and analyze the question. So we're saying that Superlight Limited acquired the land from Wema Estate at a cost of 15,600,000. So that figure that we use for acquisition, that figure is basically what we call the adjusted cost, and to be precise, that is a purchase cost. So other incidental cost incurred in relation to acquisition, we have a legal fee of 464, that is part of adjustment cost. We have commission of 3.4 million, that is part of adjusted cost. We have a stamp duty, that is 312,040, that is also part of what we call adjusted cost. Then we have the survey fee, also part of adjusted cost, and then we have land board consent facilitation, also part of adjustment cost. So then we are being told that Superlight Investment Limited later sold the land to Express on 1st May 2023 at a transfer price of 31,200,000. So the figure 31,200,000 is what we call transfer value. That figure we call it transfer value. So we're being told that, however, Superlight Investment Limited did not pay the capital gain at the time of transfer. So if it did not pay, then there's definitely what we call a penalty that accrue for non-payment of that capital gain at that time. At that time, we note that capital gain is paid by the 20th of the following month. So definitely there's a penalty that we're going to basically sort as we do this question when you do not pay the capital gain on time. We're being told that the Revenue Authority issued an assessment, that is on 30th June 2024, that after a period of 1 year, 2 months. So basically 14 months at the lapse before they transfer, they pay the capital gain. So the first question, compute capital gain tax payable by Superlight Investment Limited, assuming that the company had paid on due date. Assuming that the company did its business well and there was nothing that is pending. So we'll say that capital gain, we start with capital gain. Capital gain is equals to what we call transfer value minus what we call the adjusted cost. So we can have the capital gain Superlight Investment Limited. You just note it here, Superlight Investment Limited. Superlight Investment Limited. Capital gain. We say for the month of we say that for the month of May 2023. For the month of May 2023. So I'll have shillings up and then have shillings here. Then I talk about sales proceeds. Sales proceeds or the selling price. Sales proceed is a figure of 31,200,000. Then you say less incidental cost, incidental costs. These are basically costs that are incurred while selling. For this particular, we don't have those incidental costs that were basically incurred. Those incidental costs could basically mean if you'd made an advertisement, if you did an advertisement while you were selling, or you had brokers who were basically looking for clients. So at that point, we don't have incidental costs, so then we have what we call transfer value. We get the figure for transfer value. So the transfer value in this case should be 31,200. Should be 31,200,000. Then you say less what you call adjusted, less what you call the adjusted cost, less what you call the adjusted cost. Adjusted costs, we said that should be the purchase cost stroke the construction cost plus enhancement cost. For example, the painting that you do to the buildings. Then you say incidental costs that are basically incurred during or after purchasing. Then we less what you call investment allowance. So on the adjusted cost, we have the first one, when acquired, that is the purchase cost. We'll have the purchase cost. Purchase cost is a figure of 15,600,000. 15,600,000. The next item is a legal fee. We have those are incidental costs, legal fees. So the figure for the legal fee is 464,320. 464,320. Then you have what you call commissions. Commissions. That should be 3.4 for the commission. 3.4 for the commissions. We have the next that should be stamp duty, another stamp duty, duty. So stamp duty should be a figure of 312,040. 312,040 for the stamp duty. Then you have survey. What you have a survey fee. So the survey fee is 100,000. The survey fee is basically 100,000. Then we have what you call land board consent facilitation. Land board consent facilitation. Consent facilitation. That should be 20. So we look at the total for the total adjusted cost that need to be deducted. So that figure that needs to be deducted. We pick our calculator and we had the whole thing. So we have 15,600,000 plus 464,320 plus 3.4 million. Then we have plus 312,040 plus 100,000. Then plus 20. So we have a figure of 19 million, a figure of 19 million, 896, then you have 360, At that point we have, when you less transfer value minus the adjusted cost, we have what called the capital gain. Capital gain. We get the capital gain. We get the figure for the capital gain. So the capital gain should be 31,200,000. 31 million. We pick the paper and we just look at it again. So make sure that everything is okay so that we don't miss on anything. So that should be 31,200,000. Then we less the adjusted cost. That should be 11,303,640. 11,303,640. That should be the capital gain. The withholding tax, which is called the capital gain tax. The withheld capital gain tax. So that is the withholding tax. The withholding tax, we know that that is 2023. So the rate for that time, for the 2023, we know is 15%. So we get the capital gain tax, which is 15% times the figure of 11,303,640. 11,303,640. So the first question, we are basically told by the examiner, that assuming that the capital gain tax was paid on due date. The due date, if it was May, the due date should be 20th of June. If it was done by 20th of June, number one, there are no penalties and interest that basically is going to emanate from it. So we get the 15% of that. So 0.15. So the capital gain in question, CGT or withholding tax, that should be 1,695,546. That should be the capital gain tax. That is for part 1. So we proceed from Roman 2, that is 3A Roman 2. Calculate the penalties and interest charged and the total tax payable by Superlight Investment Limited if the company paid after 1 year, 2 months. So automatically when you exceed the period, that is basically a period of you do not pay by the 20th of the following month, then there definitely there's a penalty that accrue that we know that is 5% of that tax that is in question that is due. Then if you continue not to pay, there's an interest that accrue for 1% of 1%. So we need to get automatically Roman 2, there's a penalty. There's a penalty for not paying, and that penalty, we have a penalty of 5%. 5% of the figure that is 1,695,546 as a penalty. So we can get that penalty. We can get the penalty. So 5%, that is 0.05, 0.05 times 1,695,546. So the penalty is a figure of 84,000.3. We can round it off to a whole number. So we have 84,777. Then we know that if you do not pay, there's an interest that accrue. So we have the interest per month, that should be 1%. You do not pay for 14 months, so then you have times 14, then times the tax in question, that is 1,695,546. We get that figure, 1,695,546, 1,695,546. That is the interest. So that is 0.01 times 14, then times 1,695,546. So the interest that accrue from that, that should be 237,376. We have it 0.4. We just round it to all numbers, so that should be 237,376. So assuming that this person did not pay, they're only prompted by Revenue Authority after 14 months. So plus the tax that is payable, plus the tax payable, plus the tax payable, or CGT payable. The CGT payable is 1,695,546. 695, 546. Total amount, we get the total amount of tax payable. That is, if you include the interest plus interest, penalties, and the tax that is due. So the amount that is payable, that should be basically 8477 plus 237,376 plus 1,695,546. So the figure should be 2,017,699. So assuming that this Superlight Limited was not, Superlight Investment Limited was not compliant, basically they should have paid a figure of 2 million. There's a penalty. We say that 5% of the tax that is due. You compare with the 1%, that is 1% of interest per month. We have it there. So if it was not compliant for 1 year, 2 months, that is 14 months, then the tax that is due should be a figure of 2,017,699. Then there's a part Roman 3. There's a Roman 3. The management of Superlight Investment Limited are considering on whether to negotiate with the Revenue Authority in effort of being exempted from payment of the penalties and interest. Advise the management of Superlight required. Advise the management of Superlight Limited on factors that could be considered by the Revenue Authority while negotiating for a settlement of taxes, penalties, and interest. So, for example, you have found yourself in a scenario where you have penalties and interest. So, what are some of the issues that can basically be raised, can be considered by Revenue Authority when negotiating? So, one of it is amount of interest and tax, amount of penalties and interest. We can talk about amount of interest, penalties and interest, penalties and interest, amount of penalties and interest. We can also have the financial status. What do you have as the financial status of the taxpayer, And at that particular time also the issues to do with tax amnesty programs in place. Tax amnesty programs, what do you call the tax amnesty programs in place. That can be a factor that is considered, whether it was intentional, whether non-payment, non-payment was intentional or mistake, whether non-payment was intentional or mistake, where the non-payment of those interests and taxes was basically intentional or mistake. Those are some of the factors that the Kenya Revenue Authority would consider in relation to those interests that emanate and the total tax that is payable to the Kenya Revenue Authority. That is how we basically handle that question on the capital gain tax. Welcome to Manifested Publishers. We proceed on economics paper, that is April 2024. The last question, question 1. Explain the term producer equilibrium as used in economics. Explain the term, that is 7 Roman A Roman 1. Explain the term producer equilibrium as used in economics. I just want to draw a diagram before I explain that, basically explain that producer equilibrium. We can have this. This is an ISO cost. That is basically an ISO cost. So we have capital, and we have labor, and we have labor. This is an ISO cost. So AB is an ISO cost line. Then we draw an isoquant, not in difference curve, but isoquant. And then we have Q. We can say Q is 3. So the point that isoquant line forms a tangent with an isoquant, that is where we get the producer equilibrium. So we have equilibrium quantity of capital, that is KE, and equilibrium quantity of labor, that is LE. So we can say that this is 3,000. So we basically need to understand that 3,000 in this particular, 3,000 units is the level of output, is the level of output, is basically the level of output, is the level of output that gives, that basically gives the farm the maximum. We call it the maximum profit. Gives the farm basically the maximum profit. So what is producer's equilibrium? Refers to the level of output. Basically we say producer equilibrium is therefore the farm, we say the farms, is therefore the farm's level of output, is the farm's level of output, Producer equilibrium is therefore the farm's level of output, which gives the maximum, what we call the maximum profit, which gives the maximum profit. And as you can see from the diagram, this is an isocost. AB is an isocost line, and then we have Q as an isoquant. So 3,000 is the level of output that will give the maximum profit. So a farm is said to be, just a continuation, a farm is said to be at producer equilibrium, A farm is basically said to be at producer equilibrium, if there is no scope, if scope is intention, if there is no scope of increasing, we say scope of increasing, the scope of increasing the profit, or reducing the scope of increasing profit, or reducing the loss, the scope of increasing the profit, or reducing the loss, by changing, we say by changing the output, by changing the quantity, of output, by changing the quantity of output, So if you look at that question, that's question particularly tackling 2 marks, but it's expounded fully. That is the diagram. So at 3,000, that is where we have producer equilibrium. So 3,000 units is the level of output that gives the maximum profit. But you say producer equilibrium is therefore the farm's level of output, which gives the maximum profit, that basically gives the maximum profit. And you say that when a farm is basically at a producer equilibrium, the farm has no scope of either increasing profit or reducing the loss by changing the quantity of output, by changing the quantity of the output. That is how we particularly go through that question. We pick it on the next question, that is question 7, A, Roman B. So the question says, highlight assumptions of the producer surplus. Highlight assumption, that is Roman 2. Highlight the assumptions, what do you call the assumptions of a producer surplus. Highlight the assumptions of a producer surplus. So before we highlight assumptions of a producer surplus, it is very important to understand what we basically mean by a producer surplus. When you talk about a producer surplus, we basically say that there is a difference between the amount the producer is willing to supply good for and the amount that they actually receive when they make the trade, which in most cases we say is additional benefit, because you realize that what they receive is more than the minimum that they're willing to supply the goods for. So that is actually a benefit. So if you're to draw, that is not of essence, but you can particularly have questions that will tell you to define a producer surplus and draw the diagram. But for this particular question, it has simply asked on highlight 5 assumptions of the producer surplus. When you look at those assumptions, one, we talk about producer is assumed to be rational. Basically, a consumer is aiming to maximize profit, and we know that we maximize profit where MR is equals to MC. So we say number 1, producer. One, we say producer is assumed to be rational, i.e. we say aim to maximize the profit, We know i.e. at the point, MR is equals to MC. That is basically where the consumer basically aims to maximize the profit. The second assumption is that there is perfect competition. There's a perfect competition market. Number 2, we say there is a perfect competitive. There is a perfect competitive. We call it a perfect competitive. There is a perfect competitive perfect competition market. There is a perfect competition market. We know how a perfect competition basically work, and we say that assumed to be perfect, perfectly competitive. Assumed to be perfectly, we say perfectly competitive. Consumer is basically assumed to be perfectly competitive. Then you say that there is free entry and exit. There is a next assumption. There is what you call free entry and exit, i.e. there is free entry and exit, i.e. that is to say that producer can freely enter and exit. Can freely enter and exit as the third assumption. The fourth assumption, basically, we say there is no externalities. There is no externalities as the next assumption. Basically, we say that there is no externality. That is saying external cost and benefits, external cost or benefit. No external, what you call external costs and benefits No external cost and benefits. And lastly, assumptions, we say constant return to scale. The fifth assumption, we say constant return. We call it constant return to scale. What do you basically mean by constant return to scale? We know that average cost of production remains constant. Average, that is to say average cost of the production. Average cost of the production remains constant. Average cost of production basically remains constant as quantity produced increases. quantity produces, as quantity produces increases. As quantity produces basically increases. As quantity produces basically increases. As the quantity produced basically increases. Again, I said at the beginning of that particular question, I said you can be asked what a producer supply as a major area, and you can also be told to illustrate using a diagram how producer supplies basically come. And that is how we particularly handle that question. That is question 7, A Roman 2. That is how we go about that question. We'll pick it on the next question, that is question 7, Roman B. With the help of a well-labeled diagram, explain the stages of law of diminishing return. We put that question down. With a 8, we'll say with a 8, with a 8, we'll call it with a 8, with the aid of a diagram, with the aid of a diagram, we'll say explain the stages, of the law of diminishing return, So when you talk about the law of diminishing return, we also call it the law of variable proportion. What does the law of variable proportion basically talks about? We say that when a variable factor of production, that is labor, is added to fixed factor of production, and that is land, we say that total output increases, but at a decreasing rate. The total output increases, but at a decreasing rate. We can illustrate, first of all, come up with the diagram. We proceed to this at the end because this end is a bit small. So we have our diagram on this end. And you talk about those stages. Basically, this law of diminishing return or the law of variable proportion, we have it here. So this is what we call total product at that end. We have the total product. We have this as average product. We have it as average product. Then up here, we have what we call the marginal product. So on this other end, we have total product, marginal product, and average product. And down there, we have quantity. We have the quantity. We illustrate on that point. At that point, we illustrate. So we have what we call stage 1 on this day, stage 1. We have stage 2. And finally, we have stage 3 on this other end. We have stage 1. This is stage 2. And this is stage 3. So basically, when you talk about the law of variable proportion, the diagram is this. And the diagram is basically divided into 3. So we have the first stage. We call it increasing, what we call increasing returns. So on basically increasing return, we are saying that when a variable factor is added, and the variable factor is labor, is added to a fixed factor of production, which is land, total product increase but at a decreasing rate. So what essentially happens in this part is that when that happens, when we talk about TP, we talk about MR, and we talk about AR, are all increasing, all increasing. All of them are increasing. All of them are basically increasing. That is at increasing return, which is stage 1. Stage 1, as it is. That is stage 1. That is what happens in the stage 1. That TP, MR, and AR are all increasing when a variable factor is added to a fixed factor of production, which is land. We have the TP, we have the MR, and AR all increasing. Stage 2, we call it a constant return. So basically, we are saying that when we basically had a variable factor, which in this case is labor, to a fixed factor of production, which is land, we will see that at this particular stage, in as much as probably you can have the total product increasing, we'll see the margin of product. At this point, we'll find the margin of product. If you look at the margin of product remaining constant. Margin of product will have the margin of product basically remaining marginal product at a particular point, margin of product remaining constant. So you'll have a margin of product at one point. Maybe you have between quantities, quantity. You can have maybe a quantity that follows, maybe between 4 and 5. You're having a margin of product, which is MP. This is P. Sorry, average product, and that. This is average product. Sorry for that. This is marginal product. So we have the total product in the first stage, marginal product, and AP all increasing. The second stage, we are saying that it's called a constant return. What we call a constant return. So on the constant return, we'll have the TP increasing, but you find at that particular stage, MR remain constant at a particular stage. Maybe a unit of 4 to 5, you find MP. Sorry. That is the MP, which is the marginal product, remaining constant. So we can have the total product increasing, but you'll find MP remain constant, maybe at 4 and 5. So that is what you call constant return. And then we have the third stage. The third stage, we have what we call decreasing stage. So on the decreasing stage, look at the decreasing stage, which is stage 3. This was stage 2. This was stage 2. This is stage 3. This is basically stage 3. So decreasing stage, we can see the total product. We can see the average product. And we can see the marginal product are all decreasing. In fact, the marginal product is negative. So we see TP, AP, and MP are decreasing. So when we add a variable factor, which is labor, to a fixed factor of production, which is land, total product, average product, and marginal product are all decreasing. But we can see also that at that particular point, MP is even getting MP gets negative. Initiating inefficient MP is negative even at that stage. So for the diagram, that question is 6 marks. The diagram will constitute a huge number of marks. If it's 6 marks, the diagram will particularly take a huge mark. The diagram could take even 3 or 4 marks. Then the explanations that we have summarized on this particular point, those will take the remaining marks, which is either 2 or 1, maybe there. But the diagram will basically constitute a lot of the marks in that particular question. The diagram will constitute a lot of marks in that particular question. And that is how we particularly go about that very question. But even on this, we have assumptions of the law of variable proportion, or the law of diminishing returns. The law of variable proportion, or the law of diminishing return. You can have the assumptions. You can be asked the assumption. You can also be asked. On shortcomings or limitations of the law of diminishing return. That is how we particularly handle that specific question. We proceed from the next question. That is question 7, Roman C. Explain 4 monetary policies that the central bank of a country might apply to control inflation. That the central bank of any country might apply to control inflation. So when you look at this particular question on a yearly basis, this is a question that keeps on repeating itself. Even on the 2020, even on the other exams, you find particularly questions that touches on monetary policy is always there. So we put down the question, then we go through the question. So that is to say, explain, one we call explain, 7 Roman C, explain, 4, say for monetary policies, that a central bank of a country, might apply to control inflation. So I explained 4 monetary policies that a central bank of a country might apply to control inflation. Number 1 is to understand what you call monetary policy. Whenever we talk about monetary policy, we basically call it, these are instruments that are basically used by the government through the central bank to regulate the supply of money. Either the supply of money is high or low. How do you use these instruments to basically control inflation? The first one we talk about is what you call the bank rate. Where the first one we call it the bank rate stroke what you call the interest rate. The bank rate stroke what you call the interest rate. So when you talk about the bank rate stroke the interest rate, we know that when the supply of money is high, the interest rate is usually raised to reduce the money supply altogether, or to reduce inflation, and vice versa. So we say that during inflation stroke high supply of money, interest rates are raised. Hence this will control inflation. Hence this will control inflation. Stroke reduces the supply, high supply of money. So the second one, we can talk about what we call open market operation. Market operation. So when you talk about open market operation, this is buying, what you call buying and selling of the government security. Buying and selling of the government security. And particularly when you talk about the buying and selling of the government security, we're talking about T-bonds and treasury bills and bonds. So we basically know that when there's a high supply of money, that is when there's inflation, the government will basically sell security to the public to reduce the flow of money. So we said during inflation, the government, we say that the government will sell securities to the public in order to reduce inflation stroke high circulation of money. So we have number 3, what we call compulsory deposit. Stroke reserve requirement. What we call reserve requirement. Compulsory deposit stroke what we call the reserve requirement. Whenever we talk about the reserve requirement stroke the compulsory deposit, we basically mean that all the commercial banks must hold a reserve with the central bank of any country. And we're basically saying that when there is inflation or when there is high circulation of money in the economy, what the banks or the government in relation to the central bank basically do is that they increase the compulsory ratio or the reserve requirement to make sure that most of the money are with the CBK. So we need to say that during inflation, the government through the CBK or the central bank of any country will increase the reserve stroke what you call the compulsory ratio, compulsory deposit, not ratio but compulsory deposit to ensure there is no high circulation. There's no high circulation of money to the public. There's no high circulation of money to the public. There's basically no high circulation of money to the public. And there's no high circulation of money to the public. There's no high circulation. And lastly, we can talk about selective, what you call selective credit control. Selective credit control. One of the reasons why we have inflation being high is that when there's a lot of money in circulation, when there's credit available to all sectors of the economy, then you know that that can lead to inflation because there will be money all over. There will definitely be money all over, and that leads to what you call inflation. But basically, during inflation, the government through the CBK will do what you call selective credit control, where credit will only be given to a selective sector of an economy, to a selective sector of economy. And that will be basically a productive sector. We can talk about productive only to a productive sector. We can talk about a productive sector. So when that happens, you know, when you have the credit being selectively given only to a productive sector, this reduces, we'll say that this controls the inflation, this controls the inflation, stroke circulation, stroke high circulation of money, high circulation of money to the public. That basically controls high circulation of money to the public. And lastly, as an additional, as a bonus one, just to understand this deeper, we can talk about what you call the cash ratio. I just explained it, cash ratio. So we know that particularly when there is high circulation, you know, of money in the economy, what basically the CBK, the government through the CBK does is that they increase the cash ratio. That will reduce circulation of money. And hence by doing that, they reduce inflation. But again, also of essence, of importance is to understand that questions will not only be touching on this. We can have questions that will basically touch on even fiscal policy. So it's important to understand what the fiscal policy is altogether. Apart from the monetary, it is also very important to understand what we basically mean by a fiscal policy. That is how we particularly handle that question. We'll pick it on the last question. That is last question, April 2024, economics, the last question, that is 7 Roman D. Outline 3 measures that developing countries might use to promote agricultural production. Outline, that is D. Outline what we call 3 measures that developing what we call developing developing countries might use to promote agricultural production, So when you talk about this particular question, again, it's also more of a general question. When you talk about factors that foster or promote or encourage agricultural production, we know that the basis, one of the major backbone of an economy in this developing country is agriculture. Still, majority lies on agriculture, not much of the industrialization. So again, I say that this is a very much open question. When you ask such a question, we can say one of it is reduce taxes on agricultural, reduces the taxes on agricultural input. So you make agricultural input, and this encourages production. Then you say adopting an irrigation scheme, adopting irrigation schemes to overcome adverse weather condition like drought. To basically overcome adverse weather conditions. Adoption of irrigation scheme to overcome what you call adverse weather conditions. And you can talk about developing infrastructure, what you call developing infrastructures in the developing countries. I explain particularly this. Why is infrastructure very important? Some of the challenges and why we have not spurred agricultural production in developing countries because of infrastructure. You find the roads, particularly the roads from the industry to the markets, are not very poor. So with that, there are delays in terms of exportation and that. So when you develop infrastructure, that in turn promotes what you call agricultural production. But I say that this is more of a general question. We can talk about a number of things. We talk about investing in research so that you can come up with better quality of products, investing in research. Again, we can also give loans to entrepreneurs, for those that actually wants to engage in farming massively. The government can offer loans to such. But again, also research is also very important into coming up with better qualities of products in order to invest in. That is how we particularly touch on that very question. That is question 7D, and that marks the end of that paper. Goodbye. We see one another in the next session.
Today we will cover the law of property, its definition, classification, property in land, interests in land, intellectual property, the administration and management of land, as well as sectional properties, and how we go about sectional properties. Then we'll also deal with the role of professionals in land transactions. Then we'll have the assignment with regards to the law of property. The law of property is concerned with the bundle of rights a person may have on land. We'll also cover property in terms of ideas when we talk of intellectual property. So property is not just the physical, but it is what you have come up with, what you have been able to probably make a recipe. We talk of the Coca-Cola secret ingredients. That is something you own. So it is not only physical, but it relates to ownership and it relates to proprietary. And property law will define the range of functions a person may exercise in a given situation at a given time. And with proprietary rights, obligations arise. And with land, we will encompass not just the soil, it also includes anything found above and below the soil. And these are permanent fixtures like houses, as well as minerals that may be depleted over a period of time. And the common law conception is whatever is attached to land belongs to the land. And we talk about possession and ownership. Ownership is where you have the title, the proprietary title. Possession is the mere right to hold and the actual, or to be actually there. And this is what we were saying. When you rent a house, you don't own it, but you're in possession of it. For the time period you're paying rent, you're agreeing with your landlord as to your presence there, then you are able to use it. So ownership confers proprietary rights. And in certain circumstances, the possession may confer the right to use, which is what we are saying. Once you possess, when you lease land and you want to till the land, you want to plant, and whatever you get from that belongs to you. But the land belongs to the owner, the one with the title deed, the one with the ownership documents, the one with the rights and obligations that relate to the transfer of that land, the partitioning, all these other issues. And ownership may take three forms: sole ownership, joint ownership, or common ownership. And sole is where you personally own it and you exercise all the rights. Where there's joint ownership, there's you and I, or you and I and another, two or more persons, and we will enjoy the rights and characteristics as if it was what you are owning by yourself. And joint ownership is characterized by unity of title. If we have these 50 by 100 and we have contributed equal amounts, the title will come out in our names or will form a company. So there is that unity of title and unity of possession. That is, you're entitled to each and every part of the land. You can't prohibit me from entering and using that land if we have a joint ownership. There's also the unit of interest. And that similar interest will subsist until we either dispose or one of us is no longer interested or no longer in that agreement. And this unity of interest, we are joined together because we have a common property, we have common something that is binding us, that if you misuse, I will get hurt. If I misuse and probably dump waste and the value of that land declines, you will also be affected. This is what we are saying, there is unity of interest. Then there is unity of time. And unity of time is that we all acquire these joint at the same time. None of us can play, there's no priority in who did what first. The title will confer all of us at the same time. Where there is common ownership is the essence of separate but undivided shares. And it does not it does not confer the right of survivorship. But a common owner can transfer his shares to others with consent of the other owners. Talk of communal land, and where we live together and we have to agree. Are we selling this communal land? And for as long as we are living here, our interests are the same. But once the land is sold or it is partitioned and each person is given a quarter, a half, an eighth, the common ownership ends because now you have your own individual ownership.
Hi students, welcome to another session of Manifested Online Classes. My name is Joseph Kimani, Lecturer for Financial Reporting and Analysis. So in this session, I want us we continue with the topic number 3 with a special focus on subtopic number 5 regarding presentation or preparation of financial statement by cooperative societies. But before you look on the financial statement which a cooperative society need to prepare at the end of the year, we need to know what is a cooperative society, why is a cooperative society formed, and so on. Now, a cooperative society basically refers to an association or an organization which is formed in order to promote the economic well-being of its members. Basically, what that means is that a cooperative society here is not formed in order to provide services or basically in order to sell some goods now to the members of the public with an objective of making profit. So meaning that a cooperative society here is actually formed in order to promote now the economic well-being of the members. So therefore you can say that a cooperative society yes, so therefore in that case you're saying that a cooperative society here will be formed will be formed in order to do what? To promote now the economic well-being of its members and not to provide services or basically to sell goods now to the members of the public in order to do what? To make profit. So mean that whenever, for example, maybe a number of individuals come together, they decide to form something like a SACCO. Basically, a SACCO is a good example of a cooperative society. And we know that those particular members will be forming that particular SACCO in order to make some savings. And if one of the member maybe require a small loan, then he can be able to come to that particular SACCO and be able to do what? To borrow that particular money. So meaning that the objective of forming that SACCO is to promote now the economic well-being, to promote now the economic welfare of who? Of the members. Now, whenever a cooperative society is to be formed, a cooperative society is formed and also registered in accordance with something called the Cooperative Societies Act. And basically, once a cooperative society has been registered in accordance with that particular act, then it is recognized as a legal entity, meaning that a cooperative society do have the same status just like a company. A cooperative society can be able to own property. It do have what we refer as a contractual capacity. It can enter into contract on its own name. It can sue or be sued. It can own property and so on. So therefore, a cooperative society do have the same status, just like what? Just like a company. It is a legal entity. Now, according to the Cooperative Societies Act, we have 3 types of cooperative societies which can be registered or which can be formed in accordance with that particular what? Act. So therefore, in this case, we can look on the different types of cooperative societies, types of cooperative societies, which may be registered in accordance with what we refer as the Cooperative Societies Act. Number 1, we have something called a primary society. A primary society. So when talk about the primary society, this refers to any cooperative society which is formed by individual members. And according to the Cooperative Societies Act, for this particular cooperative society to be formed, it must be formed by a minimum of 10 qualified persons. And actually, for a person to qualify to be a member of a cooperative society, according to the Cooperative Societies Act, such a person need to have attained the age of 18 years. Number two is that such a person must be a resident or basically must own land within the cooperative society's area of what? Of operation. And number three is that that particular person must be within the profession, within the employment within which now the cooperative society is operating. So mean that if, for example, a cooperative society is formed like a coffee farmers, for any person to qualify to be a member, then such a person must be a coffee farmer. So therefore, it is important to note that primary societies are those particular cooperative societies here, which we are saying are formed by individual members, members. And also we are saying that according to the Cooperative Societies Act, for this particular cooperative society to be formed, it must be formed, or basically it is formed by a minimum of 10 qualified members, or basically 10 qualified persons. Number two, we have something called the secondary cooperative society, or basically we can refer to it as the cooperative union. Cooperative union. In other terms, it can also be known as a secondary society or a secondary cooperative society. And this is a particular cooperative society which will be formed by two or more primary societies. So mean that members of two or more primary societies may come together and they decide to register now a certain cooperative society. That cooperative society now which will be registered, or basically which will be formed, then we say it is formed by a primary society. So therefore, cooperative union is that particular cooperative society which is formed by two or more primary societies, two or more primary societies. Number three, or the other type of cooperative society is something known as the cooperative union. So when talk about the cooperative union, this refers to that particular cooperative society which is formed at the national level, basically to promote the growth and the development of what we refer as the cooperative union. So therefore, it is formed at the national level. The objective of forming this particular cooperative society is to promote the growth and the development of cooperative union. A good example of this particular cooperative society in Kenya is what we refer as KUSCO. KUSCO basically is a cooperative society which is formed at the national level to be able to promote the growth and development of cooperative union. So we can say yes. So therefore, what we refer as a cooperative union. Okay, cooperative union. We can use the word Apex Society. Let's rename this. The appropriate name for that, sorry, should be Apex Society. Apex Society, sorry for that, not cooperative union. So therefore, Apex Society, we are saying, is a particular cooperative society which will be formed at the national level to be able to promote now the growth and also the development of what we refer as the cooperative union. So therefore, according to the Cooperative Societies Act, we have those three types of cooperative societies which may be formed and also registered in accordance now with the Cooperative Societies Act. Now, our main focus here, as the topic suggests, is basically preparation of a financial statement of cooperative societies. And therefore, which are the financial statements which are prepared by a cooperative society? So we can look on those corporate financial statements. statement prepared, financial statement prepared by cooperative societies. Societies. First of all, it is important to note here that when we talk about the financial statement, we are talking of the final accounts which are prepared by cooperative societies at the end of the year to basically ascertain their performance, to ascertain their financial position. In this case, we have three final accounts, three financial statements which are prepared by the cooperative societies, and those financial statements include number one, what you refer as the income statement. Income statement, which is also known as a statement of profit or loss. And number two, we have what you refer as the appropriation account. Appropriation account. And number three, we have a statement of financial position. Statement of financial position. So these are the final accounts which any cooperative society need to prepare at the end of the year. So let's start by looking on what is an income statement and why a cooperative society need to prepare the income statement. So number one, we have the income statement which we also referring to a statement of a profit or loss. And as the name suggests, a statement of a profit or loss, or basically what you're referring to as an income statement, this one is prepared to determine the performance of a cooperative society. So mean that in preparing the income statement or the statement of profit or loss, basically what the cooperative society will be doing is basically comparing the income of a given financial year and what you refer as what? The expenses or the expenditures incurred during that year. Any difference between the two is actually a profit or what? Or a loss. So therefore you can say that this is prepared. It is prepared to ascertain financial performance. Financial performance of a cooperative society. Of a cooperative society. In other terms, we can say just prepare to ascertain the profit or loss of a cooperative society in a given financial year. So how do we prepare, or how is this statement of a profit or loss presented? So let's look on the format or the layout of what we refer as a statement of profit or loss. Statement of profit stroke loss. Automatically this is the one is prepared for a certain year. Yes, so here always we start by recording incomes of the cooperative society. Incomes of the cooperative society. A cooperative society may have various sources of incomes, including things like investment income, and we prepare this account on using vertical format. So a cooperative society may be having something like investment income, things like interest on loans to members. So whenever a cooperative society gives members loans, like a SACCO, the cooperative society will basically, the SACCO will charge some interest. That interest is basically what? An income. So also a cooperative society may be having the other source of income like entrance fees. If you are you want to join a cooperative society, you may be required to pay some fee. So these are some of the good examples of the incomes of a cooperative society, and then from there you get incomes, the total incomes, and then now to this we proceed and less the expenditures. Less the expenditures, or basically the expenses of the cooperative society. And here we basically deduct now the expenses incurred by the cooperative society in a given financial year. This will include things like maybe salaries and wages to the staff, and wages to the staff. Things like management committee allowances, management committee allowances. So a cooperative society is managed by a top organ known as management committee. Management committee. Things like what? The interest on members' deposit. Interest on members' deposit. Cooperative societies, mostly SACCOs, they pay interest which is based on members' deposit, because the SACCOs want to encourage members to continue saving with that SACCO. So at the end of each year, as a member, you are paid some interest which is based on your what? On your deposit. So we take into account that. Then we also take into account other expenses like rent, etc. So we take into account all the expenses of the cooperative society, and we less that now from the total income. So whatever you get here is now the profit for the year. The profit for the year. So that's how a statement of profit or loss or an income statement of a cooperative society is presented or is what? Prepared. So next, let's look on what is the appropriation account and why an appropriation account is prepared. Yes, number 2, we have appropriation account. Appropriation account. So as the name suggests, is this is basically an account or a final account which is prepared by cooperative societies to show how the profit for the year is supposed to be distributed to the various stakeholders. For example, this account is prepared to show how much amount was paid to the members as dividends, and also how much amount was set aside as statutory reserve fund. Now, it is important here for you to note that under the Cooperative Societies Act, cooperative societies, mostly SACCOs, are required to set aside 20% of their profit as a statutory reserve fund. So therefore, that amount which has been transferred from the profit to the statutory reserve fund, in accordance with the Cooperative Societies Act, it is also shown in this particular what? Account. And therefore, we can say that yes, so this one is prepared to show how the profit for the year was distributed to various stakeholders in form of dividend, in form of transfer to the statutory reserve fund, and so on. So how do we prepare this particular account here? So we can look on the format of the appropriation account. Appropriation account. Yes, so in preparing the appropriation account here, always we start with that particular profit for the year, which was determined after preparing now the income statement. Profit for the year, that's what we start with always. And then to this, we proceed and we less dividends which were paid. So if there are some dividends now which were paid, we come, we less those particular dividends here. We also deduct the transfer to the statutory reserve fund. Statutory reserve fund. And in this case, I've said that the statutory reserve fund, the amount to be transferred to the statutory reserve fund, this one, according to the Cooperative Societies Act, is always 20% over the profit. 20% over the profit for the year. So the examiner may have given that particular information to you, but equally, if you're given a question for cooperative society, that information still is missing, you have to note that 20% is a must, that 20% of the profit for the year must be transferred to something called the statutory reserve fund. And then after deducting those two items, what we do is that we get now the retained profit for the year. The retained profit for the year, the retained profit for the year. To this retained profit for the year, we add the retained profit balance brought down. The retained profit balance brought down. This is the profit which was retained in the previous year. And then whatever you get down here is the retained profit, which is also known as the appropriation account balance. Appropriation account balance carried down. And this particular balance which we have here, this one will be transferred to the statement of financial position as a component of equity. So this one is transferred to statement of financial position as a component of equity. As a component of what? Equity. So basically that's how the appropriation account is prepared. You can see it is basically prepared to show how now the profit for the year, the profit which was reported during the year was distributed now to the various stakeholders. Finally, I want us to look on how we prepare the statement of financial position. So number 3, statement of financial position. Now, when talk about this one, statement of financial position, formerly known as the balance sheet, this one is prepared to show the financial position of a cooperative society at the end of the. In other terms, this is a statement of asset, liabilities, and equity, and this one always has to be prepared based on something known as the accounting equation. So we can say that this. Yes, so therefore this is a statement of cooperative societies assets, liabilities, and equity as at the end of the year. As at the end of the year. On the other hand, we can say that it is prepared based on the accounting equation. Yes, so therefore this one we prepare it based on the accounting equation. The accounting equation is an equation which states that assets are equal to capital plus liabilities. Equal to capital plus liabilities. So let's look on the format. How we prepare a statement of financial position. And actually this one we abbreviated as SOFP. Statement of financial position, which is prepared as at the end of the year. Prepared as at the end of the year. So always we start by recording assets. And when preparing a statement of financial position for a cooperative society is not a must. There is no need of classifying the asset into non-current and current. Just like what the banks do, we record the asset of the cooperative society starting from those assets which are liquid. When talk about assets which are liquid, we are talking of asset in form of cash, and then followed by those assets which are highly liquid, those assets which can be converted into cash within a short period of time, and finally we record now the long-term asset like the PPE and so on. So therefore, we start by recording assets. In this case, I've said we don't classify the asset into non-current and what? Current. So when recording the asset, what is important here is you start with most liquid assets. Most liquid assets, and finally record long-term assets. So meaning that here we start by recording things like the cash and bank balance. And then next we record things like investments. things like investment. We also record things like loans to members. Loans to members. Whenever something like a SACCO has given the member some loan, that is an asset. The cooperative society expects the members to repay back those particular loan, and then you finally record the long-term what asset, such as now the PPE, property, plant, and equipment. So therefore, I've said here, no need of classifying the asset into non-current and current. And then from there, get the total assets, get the total asset. Next, we record now the capital and the liabilities. And remember what I've said is that the cooperative society here do have the same status just like a company. So therefore, for capital, we record or the capital, which is also known as equity. This comprises of share capital, things like members' deposits, and the reserves. So therefore, let's look on what we record under equity. So next we record equity. And equity, I've said that this comprises of share capital and what? Reserve. So we record the share capital. Share capital. We also have the members' deposits. The members' deposit. So it is important to note that if maybe the cooperative society we are dealing with is something like a SACCO, members will have made some deposit with such a SACCO. But generally, as a member of a SACCO, you can't be able to withdraw that particular amount of money anytime you want. So you can only be able to get back that particular amount of money if now you do what? You want to quit from that particular cooperative society. So mean that particular amount of money which you have deposited with your SACCO remain with the SACCO. The SACCO uses that as capital because mostly SACCOs use that money in terms of giving loans to members. And that's why you can see we are treating that as part of capital. As part of what? Capital. So we record other items of equity like the statutory reserve fund, statutory reserve fund. I've mentioned something to do with this. And then things like the appropriation account, and other reserves like the revaluation reserves, etc. Yes, so those are the various items of equity. And then get the total equity there. Get the total equity. And finally, record liabilities. Equally here, when recording the liabilities of a cooperative society, no need of classifying them into non-current and also what? Current. You just record all the liabilities here, which include things like what? Things like creditors. Things like creditors, the amount of money which is owed to the creditors, any accrued expense, etc. Yes. So record all those particular liabilities there and then proceed. You get what? The total equity and liabilities. Total equity and liabilities. And whatever you get here is the total equity and liabilities, always it must be equal to the total asset, simply because we prepare that statement of financial position based on the accounting equation which states that asset are equal to capital plus what? Liability. So therefore, that's how we prepare or basically present this particular statement of financial position of a cooperative society. So that brings us to the end of that session. In our next session, still in this on this particular subtopic here, we are going to look on an illustration question regarding presentation or preparation of financial statement of a cooperative society. So see you in the next class.
Welcome to Manifested e-learning platform. My name is Mr. Odongo, an advanced taxation lecturer. Today we will be handling capital gain. So at the back of our mind, number one, what is capital gain? So capital gain basically emanates when you transfer a property. So when you transfer a property, there's actually what you call capital gain. And when you talk about capital gain tax, is basically on transfer of property, and property in question is basically what you call land and building. So you cannot and say gain, capital gain, capital gain occurs when one transfers a property. When one transfers a property. Capital gain occurs when one transfers a property, i.e. land and building, i.e. when you talk about land and building, transfer property, and in this case land and building. When one transfer property, land and building. This is subjected, we say subjected to a withholding, This is subjected to a withholding. We say a withholding tax of 5%, that is previously, into bracket, withholding of 5%, that is initially. Then we say that from 2023 January, the rate changed to 15%. That effective January 2023, the rate of capital gain tax basically changed to 15%. So the figure is 15%, but initially it was 5%. So capital gain tax, which is being capital gain tax, we say that the capital gain tax is basically withheld by the transferor, The capital gain is basically being withheld by the transferor of property, the property, by the transferor of the property. That basically means by the person who transfers the property. But very important, we need to understand that before January 2023, the rate of the capital gain tax was 5%, but effective from January 2023, the rate changed to 15%, and we are basically saying that it is being withheld by the transfer of the property, and which should be remitted, and which should be remitted. We say should be remitted to the KRA, that is Kenya Revenue Authority, by 20th. We say by 20th of the following month, and which should be remitted to the Kenya Revenue Authority by the 20th of the following month. Just to emphasize on what I've said, we say that capital gain occurs when you transfer, when one transfers the property, i.e., for example, land and building. And we've said that it's basically subjected to a withholding tax of 5%, that is before 2023, but we're saying that effective from 2023 January, the rate changed to 15%. So we're saying that the capital gain basically is being withheld by the transferor of the property, and should be remitted to the Kenya Revenue Authority by the 20th of the following month. This withholding tax, very important, this withholding tax is what we call is final tax. So that once we've subject the capital gain tax presently 15%. We are saying that from 2023 to now, that should be 15%. Once the 15% is withheld, we do not subject the property in question to further taxation. We do not subject the property in question to further taxation. This is different from real estate. When you talk about real estate, and companies that are basically involved in selling of land, that is treated as business. But this is basically on transfer of property. So the 15% should be final tax. So we need to understand that capital gain, a background information, capital gain was basically suspended in 1985. That in the year 1985, this was basically suspended to allow the growth, we say the growth of property market, to allow the growth of property market in Kenya. That in the year 1985, it was basically suspended to allow the growth of property in Kenya, but was reintroduced. We need to understand, but was reintroduced, was basically reintroduced in the year, but was reintroduced in the year 2015. Basically reintroduced again in the year 2015. In the year 2015, January. In the year 2015, January. And what is the essence of introducing it? We say that the suspension in the 1985 was basically to allow growth of property in Kenya, but basically reintroduced in 2015 January, and the essence of that reintroduction was due to the following, for the following reasons. To say for the following reasons, was basically introduced for the following reasons. We can have one and we discuss them. One of the reasons why it was introduced, property had grown by then. The first reason is that property had grown by then. Property had grown by then. So by the time it was being introduced, the properties had grown by then, to allow government to allow the government to control the property, to allow the government to control the property market, to basically allow the government to control what you call the property market. That is why it was reintroduced. And lastly, we say that to raise tax revenue for the government, to raise tax revenue, what you call tax revenue for the government, to raise what you call the tax revenue for the government. Those were the three reasons why there was a reintroduction of capital gain tax. There was reintroduction of capital gain tax. And very important, we need to understand that a lot of times we ask ourselves, if we talk about property, what about the real estate? What about the real estates? Does it fall under capital gain? So I want to introduce what you call on that business income under the capital gain. So when you talk about business income, when a property is transferred on a daily, when property is transferred as a daily activity, then it is a business. When a property is transferred on a daily basis, then it is no longer what you call a capital gain, but then that becomes a business. For example, real estate company. For example, real estate companies. So when a property now, we transfer properties on a daily basis, then that becomes a business. Then we need to understand, like real estate, the income generated, the income generated becomes a business income. The income basically generated becomes a business income. And when you talk about that, under that scenario, we know that these ones now are taxed at a corporate rate of 30%, that is for the resident company, and 37.5% for the non-resident company. So they are taxed, they are taxed at a corporate, the tax as a corporate rate of 30% into bracket resident company. The basically tax at corporate rate of 30%, that is basically a resident company, paid as a normal and paid as a normal company. Paid as normal companies. Paid as normal companies. Now paid as normal companies. So that gives us the difference between capital gain and businesses that are real estates, because sometimes maybe people can think about real estate as a capital gain. This one becomes a normal business. So we go to determination, what we call determination of what we call capital gain. Determination of capital gain. So we all understand that capital gain basically emanates from the transfer of property. And property in question could be land or building. How do we basically now determine what we call capital gain? Determined as follows. We can note and say determined as follows. So we say that taxable income stock gain, capital gain on capital gain on the transfer, capital gain on the transfer should be equals to what we call transfer value minus what we call adjusted cost. So in order to determine the capital gain, we say the transfer value minus what we call the adjusted cost. Transfer value minus what we call the adjusted cost. What is the transfer value? When you say transfer value, what is basically the transfer value? Transfer value basically is the sales proceed from the sale of a property or the selling price of a property minus the costs that are incurred when the property is being sold, or incidental costs that are incurred when the property in question is being sold. For example, you have advertising cost, you have money that you paid to the brokers. Those are what you call the costs that are incurred while selling, or incidental costs that are basically incurred while selling. So we say that the selling price of the property, selling price of the property, selling price of the property, and then we say minus cost, incidental cost incurred while selling. Incidental cost incurred while selling. Incidental costs that are basically incurred while selling, e.g., advertising, comma, brokerage fee, valuation, brokerage fee, valuation, etc. So these are basically costs that you incur while you're selling the property. And then we move to now what we call the adjusted cost of property transferred. What we call now the adjusted cost, adjusted cost of property, of what we call property transferred. Adjusted cost of the property transferred. So what is the adjusted cost of a property transferred? This is the purchase cost of a property, and then we have what we call enhancement cost. Maybe you make, if you had the land, you make a building on it, you make a building on it, or you do a roofing on that, replace a number of things on the building. And then we also have incidental costs that you incur while selling or during or after selling. For example, the legal cost, the stamp duty, and etc. Then we less what we call investment allowance, and in this particular place it's called IBD, that is for the building, because land does not qualify for any investment allowance. So on the adjusted cost, we basically say that this is the purchase cost of the construction cost plus what we call enhancement cost. What are enhancement costs? These are like, for example, painting. Then we have what we call incidental cost during purchase or after purchase. Those would be, for example, legal cost, stamp duty. Then we have with less what we call investment allowance. And basically, investment allowance in question should be what we call IBD. So we say this: purchase cost, stock what we call construction cost, plus, we can extend it here, enhancement cost, i.e. painting, plus incidental cost incurred, during or after purchase or after purchase. So what are these? i.e. what you have as legal cost, comma, stamp duty, etc. Then we less what we call. So we have here purchase cost, stock construction cost, plus what we call enhancement cost, i.e. painting. Then we have incidental cost incurred during or after purchasing, i.e. legal cost, stamp duty, etc. Then we less what we call investment minus investment allowances. So into bracket, we know that that is for the building. We know we have what we call IBD. So that is what we call adjusted cost. That is what we call adjusted cost. I want us to talk about the transactions which are considered to involve transfer of property. Transactions that are considered to involve, we say to involve transfer of property. Transactions that are basically considered to involve transfer of property. What are these transactions that basically when we have them, we know that there's basically a transfer of property. One we have of selling of the property as one. We have exchanging of property. We have one selling of property, that is a selling of property as one transaction, selling of property. The second one, we call it exchange of what we call property, exchange of the property. Those transactions are deemed to be transfer of property. But we also have what we call surrendering of property. We also have what we call surrendering of property. We also have what we call abandonment of property. Abandonment of property. So basically this transaction will basically lead to what we call a transfer of property. But lastly, one very important, we have conveyancy of property, what we call conveyancy of property. So these transactions that we have noted basically will emanate to, will be considered as transfer of property, And very important, we know that the transactions that do not relate to transfer of property, transactions that do not relate to transfer, transactions that basically do not relate to transfer of property, transactions that do not relate to the transfer of property. One of it is basically when you're transferring property to a related family member. We know that transfer of property to close family member, transfer, what you call transfer of property to a close family member, i.e. that basically means inheritance. Somebody will ask, what about inheritance? If the property is transferred in question, basically inheritance, does it lead to transfer of property? Definitely not. We also have what we call transfer of property of deceased, transfer of the property of the deceased. Deceased is somebody who has died, to a trustee. Somebody to a trustee. Transfer of a property of the deceased to a trustee. And we also talk about when we have our property as mortgage for banks, those are not transfer of property. We know that property as security for loan. Property, number 3, what we call property as security, what we call as security for loan. So there is no transfer, property as security for loan. And lastly, we can talk about properties that are basically under receivers, but these ones do not result into what we call transfer of property.
When it comes to managing from a coaching perspective is a powerful approach that empowers employees, fosters a positive work environment, and drives organizational success. It involves shifting from a traditional top-down management style to a more collaborative and supporting one, where all stakeholders within a work environment can be able to ensure that they participate meaningfully in the process of building the skills of those employees who are being coached. What are the key principles of coaching management? The key principles of coaching management are: 1, focus on development; 2, empowerment; 3, active listening; 4, powerful questioning; 5, positive reinforcement; and 6, constructive feedback. So in terms of focus on development, this key principle provides that priority has to be given to the growth and development of the team members. In terms of empowerment, it is expected that the coach will encourage autonomy and decision-making. In terms of active listening, close attention has to be paid to the team's needs and concerns to ensure that those are addressed. In relation to the principle of powerful questioning, It is important that thought-provoking questions are asked in order to stimulate reflection. In terms of positive reinforcement, it is important to recognize and reward achievements, and in terms of constructive feedback, it is important to provide specific and actionable feedback. What are the practical tips for implementing a coaching management style? This will include, number one, set clear expectations. Number two, active listening. Number three, powerful questioning. Number four, provide constructive feedback. Number five, empowerment. Number six, regular check-ins. And when it comes to these practical tips for implementing a coaching management styles, under the first one, which is setting clear expectations, clearly communicate goals and expectations. A coach is expected to clearly communicate goals and expectations and ensure alignment with broader organizational objectives. And this will require that the coaching that is going to be provided to employees within a given organization is aligned with the broader organizational objectives, such that as the individual employees achieve their coaching goals, the organization, the section, the department, and the broader organization also achieve the broader organizational goals for that coaching to be meaningful. Secondly, active listening. It's important to give, as a coach, it's important to give your team members your undivided attention. Those having the coaching responsibilities should paraphrase and reflect on their thoughts and feelings. And it is important for those undertaking the coaching to ask clarifying questions in order to deepen their understanding. So that is the second tip for implementing a coaching management style, which is active listening. The third practical tip for implementing coaching management style is powerful questioning. It's important that through coaching, critical thinking is encouraged and problem solving. Open-ended questions should be used to elicit thoughtful responses, and leading questions are avoided because they may have suggestions to particular answers. So powerful questions is important to provide probing questions so that whoever is being coached can also be able to reflect. The fourth practical tip for implementing a coaching management style is providing constructive feedback. And here, focus must be put on specific behaviors and outcomes that are expected. It's important for the coach to offer actionable advice for improvement, and it is also crucial to provide positive reinforcement that is balanced with constructive criticism. So that is not a question of just criticizing, it's also not a question of just praising, but there must be a balance between what has been achieved, what has not been achieved, and what is expected to be done to be able to provide constructive feedback. The fifth practical tip for implementing a coaching management style is empowerment. The coach should delegate tasks and responsibilities. The coach should encourage ownership and initiative. The coach should also provide opportunities for growth and development. The sixth practical tip for implementing a coaching management style is regular check-ins. And when it comes to regular check-ins, it is important for the coach and that employee being coached schedule regular one-on-one meetings, creation of a safe space for open communication, and discussion on progress, challenges, and future goals. So there are these 6 practical tips for implementing a coaching management style that a coach can use. And the first one is setting clear expectations. The second one is active listening. The third tip is powerful questioning. The fourth is providing constructive feedback. The fifth is empowerment. And the sixth is regular check-ins. And if these are used, they can enhance the implementation of a coaching management style.
Welcome, candidates. So question 3, August 2024. I read question 3, August 2024. Question 3, August 2024 reads, Quantum Products Limited wishes to increase the number of its retail outlets outlets in the country, the board of directors of the company has decided to finance the acquisition or by raising funds from the existing shareholders through a 1-for-4 rights issue. The recently published comprehensive income statement of the company for the year ended 31st December 2023 provided the following information. So we have the turnover, the profit before interest and tax, we have the interest, there's the profit before taxation, corporation tax, profit after taxation, we have the ordinary dividends, then there is the retained profit for the year, and please note the figures are in millions. So that is profit, retained profit for the year is 3.75 million. Additional information, number 1, the share capital of the company consists of 12 million ordinary shares with a par value of 5 shillings per share. Number 2, the shares of the company are currently being traded on the Securities Exchange with a price earnings PE ratio of 22 times. Number 3, the board of directors of the company has decided to issue the shares at a discount rate of 10% on the current market value. Required: 1, the theoretical X rise price of an ordinary share of the company. Number 2, the price at which the rights in the company are likely to be traded. What's the meaning of theoretical? It doesn't have to be exactly what is in the dictionary. In your own words, what is your understanding of theoretical X rights price? Okay, let me simplify it. Let's take it step by step. What is a rights issue? What is a rights issue? August 2024, question 3. Is it? Yes. What is a rights issue? Yeah, you say you only recall the formula. There are times when you may expect to apply the formula and the examiner just throws you that in your face. Define theoretical X rights price. So we have Lincoln who says, I only recall the formula. Now, in the exam, when you ask a term, just drop the formula. You will earn the marks. All right? You will earn the marks. Yepchumba Maureen says, expected prices of shares following a rights issue. That is correct. That's the definition. That is the definition. Gilbert says, estimated market price of a company's share after it issues additional shares through rights offering. That is correct. That is also correct. It is the estimated price of a share. So Gilbert, you don't have to say it's the market price. Just say it's the estimated. It's not necessarily the market price. It is not a market price, but it's the estimated price of a share after a rights issue has been completed. Because a market price is determined through the forces of demand and supply. So just say it's the estimated price of a share. So we are to calculate the theoretical X rise price. 1. Theoretical X rise price. Lincoln, you say it has the formula. So we have the price, we have the number, to calculate the price of a share. We divide generally speaking, the value of a share, we divide by the number of shares. That will give us the price of a share. But you see, we are looking at the theoretical X price. So the concept is the same. We are going to take the value of the share after the shares, all the shares after the rights issue, then we divide by the number of shares. So we have existing, this is equal to the existing, because before the issue we have the existing number of shares before issue. Of course, you have the existing number of shares. Then this will multiply by the current NPS. You see that? Plus, let me be economical. This will be equal to existing shares times NPS of the market price. Okay, we add the new shares plus this is times. Am I putting down your formula, Lincoln? Is that the formula I had in mind? What we multiply hereby with, this is the subscription price. So we divide by the number of existing shares plus number of the new shares. So we have existing, new. So that's the first step. So the next step is to insert the inputs. We insert the inputs. Insert the inputs. We have the inputs directly from the question. We have existing shares directly from the question, or we need a working. Question 3. The share capital of the company consists of 12 million ordinary shares. Consists of 12 million shares. That you are given. 12 million. Do you see that? Not number 1. Existing shares is 12 million. The price, what is the price of this share? We have the price. The shares of the company are currently being traded on the Securities Exchange with a price earnings ratio of 22 times. So what is the current market price? The shares number two of the company are currently being traded on the Securities Exchange with a price earnings or ratio of 22 times. So how do we calculate, candidates, the current market price? We are given the price earnings ratio. So we need to have a working, obviously. So we need to calculate the current market price. The current market price is not provided, but we need to check for information that will help us determine the NPS. And what information we have there? We have the PE, the PE ratio. Do you see that? So the PE ratio is, we know, determined Yeah, Gilbert, you're right. That is EPS. PE ratio, is it EPS? Come on, Gilbert. EPS. First of all, before you do the NPS, let's move slowly, Gilbert. We have the PE ratio. But some people are good at memorizing, so maybe it's very easy. You just do it direct. But if you can't do it direct, go the long route. What is the PE ratio? What is the formula for PE ratio? Jerry, what is the formula for PE ratio? Without referring to your notes, please. Let's not refer to notes. Let's try and see if you can recall what we covered. Zainabu mwanangu, Muslima. Mjuko wangu, Muslima. What is the formula for PE ratio? Lincoln says NPS over EPS. MPS over EPS. Correct. MPS over EPS. But we need the MPS. So to get the formula for MPS, Ambuche did it directly, but we can make MPS the subject of the formula. We just divide this by 1, then we cross multiply like that. So we have 1 times EP cross multiply MPS. We have then MPS will be equal to PE, this PE cross multiply times EPS. You see that? So we have the PE 22 times, but we have the EPS. No, the EPS is not provided, is it? EPS is not provided. So again, we need to calculate the EPS. EPS. What is the formula for EPS? Just earnings or profit after tax. Profit after tax, earnings attributable to the ordinary shareholders of a number of shares. Do you have the profit after tax on the question? Again, it depends with the information you are given. All right. What information? Do we have profit after tax? Yes, profit after tax is 6.7 million. 6.7 million. 6.7, is this 75? Yes, 6.75 million. We multiply this by 1 million. So that will be 1, 2, 3, 4, 5, 6. So there's a point here. We move 6 times. So this is 0, 0, 0, 0. So that's the profit after tax. Number of shares is 12 million, is it not? It's 12 million. So what is the EPS? The Lord says 6 point. This 6 point. Where do you get 1 million? Chepchumba, I can still ask you, where are you getting the 1 million that you are asking me where I got the 1 million? Are you referring to this? Yeah, that's why I told you have to be very keen. The information that we are given there, it is in millions. And we have 6.75. So it's in millions. So I have to multiply this by 1 million. 1 million has 6 zeros. So that's why I multiply this by, so that we can divide. Alternatively, we could still have just done 6.75 I'm doing this because I have the luxury of time, and some of you are still maybe learning, but in an exam, you just do it like this. Okay, this is million, million. So what is the EPS? Jerry says 0.5625. 0.5625. 5625. So this is 0.5625. That is the MPS, the unknown, times the total here. So what's the MPS? 12.375. 12.375. 12.375. So this we add to new shares. How do you calculate? Fix my camera, please. Fix my camera. You are not able to see it. Are you able to see now? All right. So now we need to find new shares. New shares. We need to have a working for the new shares. What information do we use? New shares, look at what information do we use? Quantum Product Limited wishes to increase the number of its retail outlets in the country. The board of directors of the company has decided to finance the acquisition by raising funds from the existing shareholding through a 1-for-4 rights issue. 1-for-4 rights issue. That information will help us get the new shares. Okay? 1 for what? For 4. The board of directors of the company has decided to finance the acquisition by raising funds from the existing shareholders through a 1-for-4 rights issue. So what will be the number of shares to be raised? The shares, current shares are 12 million. So number of additional shares will simply be 1/4 times the 12 million. How much is it? It's 3 million, isn't it? So when you do several of these questions, candidates, you don't waste time calculating like new shares, because look at the max. Max there is just 6 minutes. You need to spend very few minutes calculating new shares. So what is the new shares? 3 million. New shares 3 million times the subscription fee. The subscription fee. What is the fee? We read that the board of directors of the company decided to issue the shares at a discount. They are issuing the shares at a discount. Note number 3. Give me note number 3. The board of directors of the company has decided to issue the shares at a discount of 10% on the current market value. The current market value. So we know the current market value price. This is the current market value. The current market value, the price for the current the current market price is 12.375. So there will be a discount of 10%. So this is 10%. If you've been attending these classes, candidates, we just take the 90% times the 12.375. And if you have a calculator, you just do 0.9, 12.375. You don't waste time. You don't waste time telling us that 100% represents 12.37. You can still do it. How about 90%? 90% will be 90%. You can still do that times 12.375. So this percentage will cancel with this. You can still go ahead and do the cancellation, but you will not earn any marks. So this is equal to 90 over 100 times, you can still do that. Then you come here and write, which is equal to 0.9 times 12.375. You see, this is just the same as this. So this is looks good, but there is no marks there. Okay, so what is the subscription fee? 11.1375. 11.1375. So that is a value. We divide by the number of existing shares. We know it's 12 million. And again, in the exam, you don't have to do this zeros. You can just do 12 million plus the new shares. These are the new shares. This is 0.3 million. And which are you following? So give me the theoretical X price. Camera. Someone has a problem with the camera. 12.1275 camera. 12.1275. This is 12.7. 12.1275. That is the theoretical exercise price. Roman 2, the price at which the rights in the company are likely to be traded. The price at which the rights in the company are likely to be traded. The prices at which the rights in the company are likely to be traded. There are 3 million. Someone says 3 million. 3 million. Number of shares. 3 million. This is 15 million. That's right, Gilbert. Now for the price at which the rights in the company are issued, yeah, my lord, check the camera. It could be the problem on your side. Now for the next part of the question, there are various ways in which that can be done. I don't know which one did we do last time. Anyone with that formula in your head? Please try to retrieve it in your head. We want to calculate the price at which the rights in the company are likely to be traded. Which formula did we use? There are several ways. MPS minus, is that so? What is the MPS? Is that true? Lincoln says, let's try Lincoln's formula. R, he says, is equal to MPS minus the top. So what is the MPS? The MPS is this one. What was the MPS? MPS. This is the MPS. So this is correct. The tap is 12.127. What is the MPS? The MPS, this one, 12.375. 12.375. What is the answer? There are several ways. I don't want to impose my way. Someone says 0.2475. Alternative from the information given, R can also be equal to Px minus Ps minus over N, where Px is the X rice price, X rice price minus X rice price minus the subscription fee divided by the number of rights needed to buy one share. Number of rights needed to buy one share. Number of rights needed to buy one share. So Px, the X rights price is how much? It is 12, this one, 12, is it 12.1275? Minus the subscription price. What was the subscription price? Did you calculate the subscription price? The subscription price, yes, we had it here. 11.1375 divided by the number of rights needed to buy one share. Do you still get that? Does that give you the same answer? So that is just another way. That is alternative 1. Now alternative 2 is not alternative 3. This is 2. You can still get this R by getting P naught minus Ps over N minus 1. Alternative 3. So currently you don't need to memorize all these, but sometimes you may be given a question that does not have some of these factors, but you need to find your way around. Sometimes the question depends, the formula you use depends on the information that is provided. Understand? So this is the current market price. What is the current market price? The current market price, is it 12.7, 12.375, then minus the subscription price. This is the subscription price, S, 11 do the same thing. Yeah, 11.1375 minus the number of shares required to buy one. It will be 4 minus 1. You get the same answer. You get the same answer. Those are alternative formulas to compute the value of a right. So please take time and do more questions on this. You get 0.2425. Yes? No. What do you get? Supposed to be 4 plus, not plus. This should be plus, please. It should be plus. N plus 1, not minus. And which I do plus 1. 4 plus 1. Yes, it should be the same.
So we proceed to illustration on incomplete records pertaining to the partnership business. And our focus is not to do the question, but our focus is precisely on the incomplete records that have been discussed. So there is a partnership. We're being told Peli and Mark have been in partnership, trading as Pama Enterprise from 1st January 2021, having contributed 12 million and 15 million as capital for Peli and Mark respectively. They prepare accounts as at 31st December every year. Due to the need of expanding business, they decided to admit Kohli on 1st May 2023 prior to the admission on 1st May 2023 and change the business to PAMAC. Kohli brought 18 million as capital contribution prior to the admission, 18 million as capital. Then you're being told that prior to the admission of Kohli, the profit loss sharing was 2 to 3 between Peli and Mark respectively. However, with admission of Kohli, they revised the profit and loss sharing ratio to 2:3:4 for Peli, Mark and Kohli. So we get to the additional information. So on the additional information, we're being told that number one, the following information was extracted from the records for the year ended 31st December 2023. So given assets, payables at the beginning, that was 2022 at the end, so it becomes the beginning in 2023, 7.2 million. We have 11 million and 50 11 million and 50. Then we have the accrued wages, 1.6 rounded to 1,000, that is 1,600 and 2,300. We have accrued rent totaling to a figure of 1,825,000. Then we have at the end 2,100,000. Then we have what we call prepaid electricity. We have a figure of 293. Then at the end we have a figure of 245. Then we have the furniture and fitting at the beginning, that was 600, and at the beginning, at the end, that is for 50. Bank balance we have 7,910. Then we have 9,566. For the equipment we have 670 at the beginning, and at the end we have 530. Then for the inventory, that is the opening, we have a figure of 1,248, and then we have at the end closing inventory, that is 897. But of essence, on that particular additional information is to adjust what we call the payable account. We have the payable account that needs to be adjusted. We have the rent, salary, and prepaid electricity, and the prepaid electricity. So being told that during the year ended December 31st, partners banked all cash after deducting the following expenses. So we look at items that we have. We look at the items that we have. We have repairs and maintenance. That is not what we are looking for, but stationery, sundry, and we have purchase, purchase for resale. So there's an item for purchase. So we have cash purchase. That is a cash purchase. Cash purchase. We have a cash purchase. During bank told this after deducting. So we have cash purchase. We have cash purchase. We can get the figure for the cash purchase. That's the figure of 190. Add a figure of 190. We have a figure of 190. And that 190, we're being told that we're being told monthly. So 190, that was a figure that is basically on a monthly basis, on a monthly basis. So that was deducted on a monthly basis. So for that cash, we multiply by 12. We multiply by 12. So we have the cash that was being deducted per month. We're being told during the year ended 31st December, the Partners Bank all cash collection after deducting the following monthly. That is 190 times 12. That is for the cash purchase. We have 190 times 12. So we have a figure of 22, that is rounded 2280, that is rounded to 1,000. That is the cash purchase. So we move to the payment that were done through the bank. We see if there was cash that was also that was done to the bank. So we have rent, that was 2250. We have motor vehicle expense. We have web hosting. We have director's allowance. We have general expense. We have electricity. Then we have also purchase of goods through the bank. So we add plus, we have the 2280 plus the purchase that were basically done through the bank. That should be 52,640. So these were done in cash. The figure of 2280 was done through cash. Then the figure of 52,640 was done through banks. So what is the total cash purchase? Cash purchase, that should be 52,640. So total cash purchase, we know for sure is 54,920. That is the total cash purchase, 54,920. 54,920. If you look at that particular question, we look at if there's any other thing like discount received, partnership was converted, there's nothing on that. Average sales, the gross profit margin is 30%. Doubtful debt, disposal, we don't have anything on that. So we have the cash purchase and we have the payable. So we determine the credit sales. So credit sales, we open what we call credit purchases, we open what we call payable, stroke what we call creditors control account. So creditors control account. So we open what we call the creditors control account. So on assets and liability, we have the payable, which is a liability. So balance brought down is a credit. So we have balance brought down, balance brought down, balance brought down. The figure is 7.2. The figure is 7.2. Then balance at the end, that is the balance carried down. Balance carried down, that is accrual at balance carried down. That is 11,050. We have 11,050. Balance carried down, that is 11,050. 11,050. So when you have this, there's not item that increases. We don't have items that increases the payable or creditors, like the debit not received. We don't have any item that reduces the payable, like the credit, like the discount received, like credit not received. So in this case, we simply have the balancing figure. So the balancing figure is 11,050, 11,050. So what is a credit purchase? Credit purchase. Credit purchase, in this case, this should be the balancing figure. There's no item that is there on the debtors control account. We know that the items that increases the payable are, one of it is a debit note received. We do not have that debit note received. On this other end, we have items that reduces the payable, like the discount, discount received. We have return outwards, purchases returned. We have the credit note received. We do not have them. So we only have the items that are there. That is the payable at the beginning and payable at the end. So the figure that is balancing here is now the credit purchases. So 11,050, we have 11,050 minus 7,200. That gives us credit purchases to be 33,850. So after getting the credit purchases, we can now get the total purchases. Total purchases should be equals to cash purchase plus what you call the credit purchases. Cash purchase plus what you call the credit purchases. So for this particular question, that is August 2024, question 2, the cash purchase as a figure is 54. We have an item of 54,920 plus the incomplete record, the figure that we do not have, that was the credit purchases, that is 3840. So what we take to the income statement, what we take to the P&L should be that we have 54,920 plus 3850 plus 3854, 54, we had 54,920 plus 3850. So we have total purchases to be 58,770. So the first application for the incomplete record. The next we're talking about salary because we have accrual. We can call it working two. Working two. This was working one. This was working one. That is on salaries and wages. We have salaries and wages. So salaries and wages. Salaries and wages. So on salaries and wages, we have accrual at the beginning, that is 1,600. Accrual at the end, that is 2,300. So that is salaries and wages. What is the salary that was paid? So when you look at that, we have repairs on that cash, motor vehicle, but we do not have salaries there. So, but on the third additional information, we have salary that is paid. Salaries and wages paid. We have what we call salary and what we call wages paid. Salaries and wages paid. That should give us a figure of 8,300. That should give us a figure of 8,300. But because this is partnership, essentially, we need to understand that salaries to the partners is a non-allowable expense. So we look at this keenly, we look for information pertaining to salaries that were given to partners that needs to be less on this. So there's an information down there on additional information 9. We are told that partners' annual salary was 1 million, 2.5 and 3 million for Paley, Mark and Colney, respectively. The partners' salary were not included in salaries and wages. So it was not included, so we don't adjust that by lessing the partner's capital. We simply adjust. Remember, this is accrual. How did we adjust accrual? The simple formula that we talked about for accrual we say expenses paid plus accrual, we call it accrual carried down, that is at the end, minus accrual, what we call accrual brought down, that is at the beginning, That is basically at the beginning, what we call accrual at the beginning. So I will do it with the T format, but we pick on that. So we get back to the assets and liability. So accrued salary, 2022 at the end, that is the beginning for 2023. So expenses paid, that is 8,300, plus accrual at the end, that is for 2023, that should be 2,300. Then we less at the beginning, 1,600. Balance at the end becomes the opening balance in 2023. So what do we have? That is 8,300 plus 2,300, then minus 1,600. So that is 9,000 salary for the year. For the year. So that's the salary for the year, 9,000 after adjustment. We can have the T format. We can have the T format for students who are happy about T format, and see whether we get the same thing. So the first one is accrual carried down. Accrual brought down, sorry. Brought down is a debit because it is a debit because it is a credit, sorry. Accrual brought down is a debit because that is a liability. That is a liability. Accrual is a liability. So brought down in that particular is 1,600. 1,600. Then we have the salaries and wages that were paid. Salary, we can call it bank. That was basically through bank. Bank. The figure for the bank that was paid was 8,300. So then we have accrual carried down, or balance carried down. You just say balance carried down. This is balance brought down. Carried down should be 2,300. If you look at what you have, this should be 10,600. Up and 10,600. 10,600. So income statement, we have the income statement. That is expense for the year. For the year. So that's the difference. The difference should now be 9,000. So if you use the T format and we use the simple formula that we've indicated, you still have the same concept. We proceed to the rent. That is at adjustment 3. That is for the rent. We're simply picking on the specifics for the adjustment. We're not doing the whole question, but we are speaking on the specifics for the adjustments. The specific for the adjustments. So we need to get rent is accrued, also outstanding. At the beginning of the year, that is for 2022, December, that becomes the opening. That is 1,821, and at the end is 2,100. What is the rent that is paid for the whole year? Under cash, we do not have this, the rent, but when you get to the payment that was done through the bank, we have 2250. So how do we adjust accrual? The same concept. How do we adjust it? That should be expense paid plus accrual carried down, that is at the end, minus what you call accrual brought down, minus the accrual brought down. So the rent paid is, that should be 22. We have 2250. We have 2250. Then accrual at the end, that should be 2,100. That is for the 2023. Then at the beginning, we have 1,825. 1,825. We have 1,825. So that should be 2250 plus 2,000 plus 2,100, then minus 1,825. So the rent for the year, that should be 25. That should be 25. If we open the T format, again, that is accrual. We open the T format. So we have balance brought down. That is accrual. The balance brought down. That should be 1825. We have the bank, the amount that was paid, that was on rent. We have the amount that was paid through the bank. That should be 2250. That should be 2250. We pick our paper so that we don't make sure that everything. So the one that is paid, that is 2250. Then balance carried down, that is accrual at the end. Balance carried down is a figure of 21. So the balancing figure, that should be 50. That should be 343, 4350. So we have income statement, and that is the expense for the year. Expense for the year, and that is the balancing figure. So expense for the year, we just less that, 4350 minus 1825. So we have what you call 25. So we pick on the next that is touching on electricity, that is working for. Working for, that is on electricity. We pick on this specific electricity, and this is to be very specific, prepaid. How do we adjust prepaid? We have expenses paid plus what we call prepaid brought down minus what we call prepaid carried down, minus what we call prepaid carried down, minus what we call the prepaid carried down, minus the prepaid carried down. So we look at the prepaid. Prepaid you're given at the beginning, that was 293. At the end was 245. What is the electricity paid? There's not electricity that is paid in cash, but when you move to additional information number 3, there's electricity. We have electricity paid through the bank, that is 1,800. So we have 1,800. So then prepaid brought down, that is 293 at the beginning plus 293. Then you have plus minus, at the end, minus 245. Then we have minus 245. So when you look at that, we are saying 1,800 plus 293, then you less minus 245. So 245, that gives us 1848. That gives us 1848. So we can have the T format. So that is on electricity. Electricity. For the balance brought down, because it's an asset, we have the balance brought down, that is the prepaid. The balance brought down is 293. The balance brought down is 293. We know that expense paid, that is to the bank, that we, when expenses increase, we debit, that is 1,800. Then we have the balance carried down, that is prepayment at the end. We have a figure of 245. What are we looking for? We call it the income statement. Expense for the year, expense for the year, expense for the year. So when you less that, when you have this is 390 2093. So we have 2093. So the expense for the year, the 2093 minus 245, that should be 1848. So that is the expense for the year, giving us still the same figure, giving us still the same figure, giving us still the same figure. That is for the accrual and prepayment. That is how basically we sort the incomplete records that pertains to partnership. So in order to do that particular question, these are very fundamental parts. In order to get the purchase, in order to get the salary for the year, in order to get the rent for the year, in order to get electricity for the year. And that again, you realize that those are entries. Without getting these entries right, you'll miss on those entries. So this, particularly depending on the question, whether the entries are half or 1 mark, you can lose 1 mark or a half a mark if you do not get that. You can lose 1 mark or a half a mark depending on how the entries are distributed. You can lose 1 mark, or you can lose a mark or a half, or you can lose a mark. That is how important those entries are as pertaining to the partnership, as pertaining to the partnership. And that is how we sort that. Students, welcome to Manifested Publishers. I would love us to proceed on question 2, that is Roman A. I read it, then I put it on the board. Using a well-labeled diagram, illustrate the regressive supply of labor. So we note it. That is question 2. Question 2. Question 2. Roman A. Using a well-labeled diagram. Using a well-labeled diagram, using a well-labeled diagram, illustrate the regressive supply of labor. Regressive supply of labor. Before we embark on putting it down and expounding it on the board, very important is to understand what we imply by regressive supply of labor. I want us to note that this is basically found in topic 2, that is demand, supply, and consumer equilibrium. And whenever we talk about regressive supply of labor, we are now talking on the exceptions of the law of supply. We need to understand what the law of supply states. The law of supply basically states that other factors held constant, supply is low when the price is low, and supply is high when the price is high. When you say exceptions is contrary. So basically we mean the supply is high when the price is low, and supply is low when the price is high. And one of the areas that an examiner has tested, that is the area of what you call regressive supply of labor. So the first thing is to put down the diagram and we expound on the diagram. So regressive supply of labor, what you call the regressive supply of labor, labor is also what's called the backward bending of supply curve. Backward bending of supply curve. Backward bending of supply curve. Stroke what you call trade-off between work and leisure. Trade-off between work and leisure. Trade-off between work and leisure. We have the diagram. So we can have the diagram here. That is the diagram. This is on wages, and we represent it with W. Then on this side we have labor hours, what we call the labor hours. We represent it with H. So I want us to pick the first one. This is wage 1. We call it wage 1. The number of hours for work is now H1. We proceed to, we can just rub it so that we make it exactly. We just rub this curve. So we have it. So we have it there. So that is H1 at that point. So this is W1. That is W1. That is W1. That is W1. W1. Proceed to the next. That is wage 2. When the wage is increased to wage 2, we call it wage 2. The number of hours offered for work is now H2. We proceed, we increase the wages. That is basically wage 3. When the wages are increased to wage 3, this is what is happening. That is now number of hours offered for work becomes H3. And lastly, I want us to introduce wage 4. Wage 4 here. So when you introduce the wage 4, we have it there, and then we have the wage 4 is there. That is, we now have H4 here. So I want us to look at this before we put it on the board. We're basically saying that when we have wage 1, the numbers of hours offered for work is H1, which is there. As we increase the wage now to wage 2, particularly wage 2 at this point, wage 2 at this point, the number of hours also increasing to H2. The number of hours also increasing to H2. When you increase it to 3, the wages to wage 3, the number of hours also increases to H3. And finally, something strange happens. When now we shoot to wage 4, the number of hours worked now reduces. H4 now gets to this very point. H4 is now at this very point. That is now where we have wage 4. That is contrary to the law of supply, basically contrary to the law of supply. So we basically say at wage 1, at wage W1, we say the number of hours, offered for work is H1. Full stop. When wage 1 is increased to wage 2, comma, the number of hours offered for work, the number of hours offered for work increases from H1 to H2. Then you proceed and say that if the wage is further increased, to, if the wage basically is further increased to W3, this is W3, the number of hours, the number of hours offered for work, further increases to W to H3. The number of hours offered for work further increases to H3. However, if the wages are increased to wage 4, comma, the number of hours offered for work, the number of hours offered for work now reduces, so we say reduces to H4. Now reduces to H4. And as I do that, I also want us to see it on the diagram. So if you look at this diagram very keenly, wage 1, at wage 1, the number of hours offered for work is H1. As we increase the wage, we know that the number of hours offered for work also increases to wage H2. And as we further increase it to W3, the number of hours offered for work increases to H3. And lastly, if we increase it to wage 4 at this point, now something different happens. The number of hours offered for work, we say, reduces. Instead of increasing, as per the law of supply, it now reduces to H4. The question is, why would that happen? Logically, why would that happen? Why would we have that exceptions to the law of supply curve, where we know that if wages are increasing, we expect that now the supply of hours for work should be high. Why is now this happening? So one, the reasons why Y as we increases, increases the wages, the number of hours offered for work reduces. What is the logic behind now as we get to wage 4, the numbers offered for work reduces much? Number one is we say some people work with targets. Some people work with target, and as they attain their target, and as they attain their target, as they attain their target, they no longer desire to work. They no longer desire to work. They no longer desire to work, i.e., they engage now on building their dreams, on building their dream or business. So the first reason why there is that we offer higher wage, but no, the number of hours offered for work is less, is that some people work with targets. And when they attain their target, and when they attain their target, they no longer desire to work, i.e., they engage now on building their dream or their business. Let's say, for example, somebody was working to get 5 million in order to start their business. Once they get 5 million, they no longer desire to work anymore. That's why, explains why, even when you increase it to wage 4, we now the number offered for work is H4. The second reason is some people will trade work for leisure. Some people will trade work for leisure. Some people, normally when they get to a certain level of income, let's say, for example, the goal was to attain 1 million shillings. Once they get 1 million shillings, they will no longer desire to work. They would want to maybe take a vacation and go and relax. That explains why when you get to wage 4, the number of hours offered for work becomes less. And lastly, we have what we call the fear of taxes. The fear of taxes. We know for sure that at certain level, incomes are not subjected to taxes. And when you get to a certain level of income or wage, the taxes may be very high. So some people, when they get to a certain level, they will no longer desire to offer hours of work for labor because of the fear of taxes. And that explains what we call regressive supply of labor. That explains what we call the regressive supply of labor. Maybe just something to understand based on this question. This question was touching on two aspects. Number one was the diagram and a bit of explanation. So always know that on these questions that basically touch on the diagram will always constitute a lot of marks. Like, let's say, for example, we had this as 6 marks. We can have the diagram taking 4 and explanation maybe one or two, one here, and maybe one reason here. That will give you a total of the 6 marks. And that is how we go about that. Let's speak on our next question. That is August 2024, question 2, but now Roman B. I read the question. Explain 3 exceptions to the law of diminishing marginal utility. Explain, that is 2B. Explain 3 exceptions. 3 exceptions to the law the law of diminishing, diminishing marginal utility, to the law of diminishing marginal utility, to the law of diminishing marginal utility. A very interesting question. So the first thing for us to understand is to understand what we mean by the law of diminishing marginal utility. So basically, the law of diminishing marginal utility says that as more and more units of a commodity are consumed, total utility increases, but at a diminishing marginal utility. And we say that as we consume more and more, it eventually diminishes. It eventually diminishes. I want to pick it practically. For example, depending on an individual, when you consume the first bottle of a soda, that is 300 ml soda, you feel you need more. But as you get to the second bottle of a soda and finishes the second, when you get to the third one, you now do not feel the much craving as you felt on the first and the second. And when you go to the fourth one, you'll experience that you begin to even vomit, and that is what you call the negative utility. Now you don't experience the satisfaction or that you experienced in the first and the second, and that is what you call the law of diminishing marginal utility. And the examiner in this question is very clear. What are the exceptions? And is very clear in asking what are the three exceptions to the law of diminishing marginal utility. What are these instances where you find a consumer who consume more and more but still desire more and more? One of it is, we say desire. One of it is desire. We call it desire for knowledge. One of it we call desire for knowledge. No one gets enough of knowledge. You'll do a PhD, but still wants to do another master's or wants to do another PhD. So knowledge, we don't get to a point that we get satisfied with knowledge. So that is one of the first exception. Another one that is common to majority is the desire for money. Desire for money. Desire for money. You can be a billionaire, but still you want more and more, more and more money. Nobody gets enough of money. We can also talk about the third one. The third one, we talk about hobby. Hobby are the things that you love to do. Even if they're too much, you still want to do them. We can also talk about what to call number 4, desire for alcohol. Desire for alcohol. We call it the desire for alcohol. The desire for alcohol. These 4 instances go against the law of diminishing marginal utility. No one gets enough of knowledge. No one gets enough of money. No one gets enough of a hobby. And also no one gets enough of alcohol. So though in that question, when you look at those four are basically what you call exceptions to the law of diminishing marginal utility. I want us to pick on the next question. Question 2, Roman C. We'll read the question. State 4 challenges faced by small industries in developing countries. Put it down. State, that is C. State 4 challenges. State 4 challenges. Challenges faced by small industries in developing countries. State 4 challenges faced by small industries in developing countries. Very important to understand small industries and what we mean by developing countries. Developing countries are countries that are not yet developed, they're still under the process of development, and Kenya is one of the developing countries. And when you look at the small industries, like when you look at the pottery, when you add the pottery and the weaving, those are small industries. And this small industry, they also play a very vital part in the growth of an economy. And in as much as they play a very vital part in the growth of an economy, we realize that they face a number of challenges within and also outside. So some of the challenges, like the examiner asked, state 4 challenges faced by small-scale industry. One of it, we can talk about stiff competition from the large firms. We call it stiff competition. When we say stiff competition, one of the challenges is stiff competition from the large scale industry. That is one of the challenges, stiff competition from the large scale industries. That is one of the challenges. We can also look at number 2 challenges that they face. We say high taxation, what we call high taxation. We can also have high taxation from the government. You realize that they are faced with higher taxation. And because of the nature that they're small, they also have challenges to do with what we call lack of capital. We call it lack of capital. We have lack of capital, high taxes, lack of capital. Again, you realize wherever they may be stationed or where they're positioned, one of the challenges that they face is poor infrastructures. Poor infrastructure and communication. We can talk about poor infrastructure and communication. Poor infrastructure and communication. And very important is to step further and talk about lack of proper management. We can also have things to do with lack of proper management. Lack of proper management due to lack of skilled personnel, knowledgeable personnel, the knowledgeable personnel. I just want to say something on this question. I want us to understand that this question touches on macroeconomics. And as a learner, very important for you to understand is that for such questions that may ask on developing countries' economic growth, these questions, you can have varied answers. You may not just be limited to what Mwalimu is putting on the board, but you can always think and come up with even much better point. But just to emphasize, the small industries face stiff competition from the large-scale industry, high taxation from the government, lack of capital. We also have issues to do with poor infrastructure and communication and lack of proper management due to lack of skills to knowledgeable personnel. That is how we go about that very question.
So how can the success and impact of coaching be measured? So measuring the success and impact of coaching is essential to ensure its effectiveness and demonstrate its value to organizations, and there are some key metrics and methods to consider. So 1, client-focused metrics. 2, coach-focused metrics. 3, organizational level metrics. 4, data collection methods. So when it comes to measuring the success and impact of coaching under client-focused metrics, the metrics that can be used can include goal achievement, tracking the number of goals achieved by clients, skill development, assessing improvements in specific skills such as leadership, communication, or problem solving, self-efficacy, that is measuring the client's perceived self-confidence and competence, job satisfaction, evaluating the client's satisfaction with their work and career, performance improvement through tracking changes in key performance indicators, that is KPIs or other performance metrics. Secondly, coach-focused metrics. This could be in terms of client satisfaction by gathering feedback from clients through surveys or interviews, coach effectiveness by assessing the coach's ability to build rapport, ask powerful questions, and provide effective feedback, time utilization through monitoring the time spent on coaching sessions and administrative tasks. The third measurement of metric that can be used is organizational level metrics. This could be looked at in terms of employee engagement, measuring employee satisfaction, motivation, and commitment, productivity through tracking changes in productivity and efficiency, turnaround rate through monitoring employee turnover rates, revenue and profit through assessing the impact of coaching on financial performance. The fourth measure of success and the impact of coaching can be through data collection methods, and these can be through pre and post coaching assessments using questionnaires or interviews to measure changes in knowledge, skills, and attitudes. 360-degree feedback, gathering feedback from peers, supervisors, and subordinates to get a comprehensive view of the client performance. Self-assessment by having clients regularly assess their own progress and challenges. Coaching logs and notes. Documents can be looked at in terms of key discussions, action plans, and insights from the coaching sessions. And client surveys and feedback forms can also be used to collect feedback on the coaching process and outcomes. So, dear learner, we've come to the end of our lesson today. And in the lesson we have covered, we have looked at our paper number 12, which is research, consultancy, and advisory. And in the lesson today, we were looking at coaching skills, which we have gone through. I have been your lecturer for this unit, Professor Evans Vidija Sagwa from Manifested Publishers. Thank you for your attention.
So today we we move on from where we were. We will do a bit of a recap and as well learn a few new functions. And I also want to spend a good section of this lesson specifically focusing on shortcuts, giving you a summary of several shortcuts as we learn new content as well. So I'll share my screen. So what I have here is a simple worksheet. So we will use this to do a bit of a recap of some of the things we have already learned, but as well we will use it to learn a few new things. So we'll talk about percentages, for example. You're familiar with addition, subtraction, and that type of thing. But we'll introduce percentages, we'll introduce some simple charts, as well as go through some conditional formula. Okay. So here I have a simple spreadsheet with some data. We could take this as employees of a small company somewhere. Okay, so I can rename this. Remember we said we can rename worksheets, so I can call this employee data, basic data. So what we want to start with is remind ourselves how we do percentages, or even before we do that, this looks rather plain, so we can do some formatting. Okay, so I want to first highlight that row, make it look better by making the title row bold. And also, I can move this out of the way and make this whole section, for the whole section I apply some visible borders. So what I've done there is used the home tab, then I went to this border option and selected all borders. All borders applies borders to everything.
So then I can also do some color coding for this section, which is what we will be focusing on. So I can put some soft green color there. Maybe the title all needs the same color. Let's make that dark red and make the text white. Okay, so it's starting to look more interesting. Right, so that's just a bit of formatting. So let's start with the allowance. We want to, this is some data about some people. Okay, there are some people in different departments. We have their first name, their staff ID. So what we want to work out is an allowance based on a percentage that we've been given. Okay, so we'll say these people get an allowance. Let's say it's a blanket allowance to start with. They all get 30%. And this basic pay, I know the numbers look small. Let's say this is basic pay in dollars. They're being paid in USD. So suppose the allowance everyone gets is 30%, well, let's make it 20% of their basic pay. How would we compute that? What formula would we use? Remember from last lesson, we said you need to remember a bit of your basic maths. So if we are getting 20% of 1,500, we will start with an equal sign like we start for all Excel formula and functions. Then we'll say 20%. So the good thing with Excel, there is a percent sign. So that is shift and 5. There are those of you who will want to do the long maths and do 20 over 100, which is the same as 20%. But because you're using Excel, you can do shift and the 5 key, so it will pick the percentage sign. Then for the times, remember it's shift and 8, then you want 20% of that. And remember, like from last time we said, we don't type the 1,500, we click on it instead. But because 20% is a constant in this case, we type it. So if I do that, I'll get this first person will get an allowance of 300. And we get some numbers there. It went beyond the range, so I want it only going up to here. Okay, so I've used autofill. You remember autofill from last lesson. So you just click on the board, on the cell that you're interested in, then point at this corner, okay, bottom right of the cell you've selected, then pull it downwards and you will autofill the formula. In other words, you will copy the formula to all the other cells. Okay, so which reminds me, suppose this constant, we wanted it, suppose it was given somewhere here. Let's say we had it in a cell here which said allowance, then there was 20%. So we want to read it. So somewhere already listed on the worksheet you're working with. Okay, so we have something like that. Let me increase the font a bit so you can see. Suppose it was already stored somewhere, then they stored the tax as well. The tax, let's say, is 35%. So it is all already on the worksheet indicated, the rates. So how can we use this here? Okay, let's think about that for a moment. For now, we have just been typing the percentage directly and has been working by copying this value multiple times. And if you look, if I go down this, you can see the cell reference is changing. This is changing. It started at E2, moving on. Okay, but the 20% is remaining constant, which is what we want to happen when we click it from here. So for example, let me just use an example to illustrate what I'm saying. Suppose this was not here, and we wanted to calculate it based on this formula. So we want to do something like that. Click on this 20, then times this 1,500. If I press enter, the first answer looks very correct. Okay. The only challenge will come when I try to copy it downwards. Okay. So if you remember, this reference has been changing as we go down the selection. You see what's happening with the case. We started at K4, which is what has that 20%. For the second one, it goes to the 35%. It's referring to K5. And you'll notice from here, it becomes zeros because there is nothing here. It is the default value there is 0. Then by the time it gets here, it will even generate an error because it will try to do K14. K14 is the one that has that. So how do we make it stick to that 20? Okay, then here we use what is called absolute referencing. Okay, it's one of those shortcuts. For you to get the absolute referencing means we will lock the 20%. That cell reference will not move down. So we could do it manually by typing the dollar signs like this. Okay, so if I type those dollar signs, you'll notice it will work out the correct figure. So in other words, as I click down this range, you will notice that K4 is remaining constant, which is what we want to happen. So an alternative to typing those manually is to use a shortcut. If I highlight this K4 and press F4, the F4 key on your keyboard. If you're using a laptop, you might have to do function F4. F4 are those functions, or rather, when I say F, I mean the function keys at the top of your keyboard. It starts with the F1 all the way up to F12. On the machine I'm using, it goes up to F12. So when I press F4, it applies the absolute reference, and then that range will be locked. Right? So that's an important thing to remember. So suppose tax, let's use the same method to work out this tax. We want to start with an equal sign, click on the range, and we can press F4 at that point now that we know how to work with F4. Okay, 5, yeah, I have the right one. And F4, then we put a times, and then we click on this. But let's make it even more interesting. Suppose we are taxing even the allowances. We want to apply the tax to the allowances as well. At this point, we're only taxing the basic pay. So it gives us that. Let me erase this part. But we want a formula that will tax even the allowances. So we will have to do odd mass, we call. So I will need to add those two. So I've done that last sign, then click on this, and this will be 35% of the sum of those two. Does that make sense? So I've done E plus F, that gives you 1800, and we are getting 20% of that 1800. All right. So that's one way to do it, but you could also use a sum function. Just a bit of a recap of what we have done. If I put sum here and highlighted those two, you still work. So still get the same thing, only that here I've used the sum, and it, at first glance, it might look like a very intimidating formula, but if you understand the logic of it, then it makes sense, because sometimes you will need to include the sum of a given range and get some percentage of it. So it wouldn't make sense for you to go adding all the values one at a time, like we've done before. If you had 10 values to add, the more concise way of doing it and the more efficient way of doing it is using sum function, which we looked at last time. But we'll do a summary of the formulas in a short while. So we have, this is how we are working out percentages. Okay, we have looked at two ways. You could write the percentages directly into the formula, or you could have them somewhere on the side. Then the computer or the Excel, the spreadsheet, will pick them directly from the range where that rate is indicated, right? So suppose if we think of things like VAT rates, different rates of different things. you can have the rate indicated in a specific portion of the spreadsheet. Then you will just need to click on that position, and then you will apply it, include it in your formula. Now, the net, let's do the net. This is simple math. So we will add the all income, everything that is coming in, then subtract the taxes. So we will need to do the sum of those two minus the tax. One way to do it is just do it directly, that plus that. Then you say minus this, and we have an answer. So it keeps highlighting all the way because I have some data there. So I will move this down. So we've looked at percentages. Yeah, it's not a very complex idea. We have also done a bit of a recap on formatting, and I've used the sum function here at least once. So these are things that will keep popping up. Now, a bit of some more formula. Let me move this out of the way. Some more formula. We now want to do a small analysis of this data that we have here. We want, for example, to count the number of people, get some data out of this spreadsheet. This is just a small sample. Suppose we had a spreadsheet with 1,000 people. We could be counting the number. We could do a bit of a summary of the data by getting the number of people in each department, maybe average age, if we had some age column here, average pay, and so forth. So let me bold this one. Then I can merge and center this section. Okay, so merge and center is something we've not mentioned. It is used to merge several cells. So I want the whole of this section to be called analysis. Then I can bold, or rather I can apply some borders to it, so it looks more presentable. Okay, you can do all sorts of things in terms of formatting. So I think what we'll do is we'll take one of the lessons and just focus on formatting, because it's an important aspect of this. All right, so we want to count the number of people in marketing. Count the number of people in marketing. Based on the functions we learned last lesson, can anybody remember any function we can use for this? We want to know the number of people in marketing based on this. We want to use a function that will check this place, and then it will give us the number of people here. Anyone remembers? Can post something on chat or say it out loud. So that would be the count if function. So we want equals count if. You remember we say these are conditional formulas. We want to check this range, select range. Nice thing is that it also gives you a prompt there. So we want to check that range. And what are we checking for? We're checking for something called marketing. Whenever we are typing text, we have to include speech marks. So if I do that, it will tell me from that range it is finding two people in marketing, right? Now there is a temptation to pull this down, to just autofill this. If I do that, then obviously there's something wrong with that data. The way to tell what is wrong with it is to actually look, if I move this out of the way and looked at the formula that is giving me this, the first one is doing the right thing, which is checking range D2 to D13, which is the range I want, for the word marketing. If I go to the second one, it has moved to, it is checking the range D3 to D14. Okay, so it has moved one step down, and it is still looking for marketing. So I need to update two things. I need to update the range. So it takes us back to the idea of absolute reference. So I want this range to be fixed where it is looking for these things, right? So I need to apply absolute referencing to that section. So I will highlight it and then press F4, right? So that fixes one of the problems. So now if I autofill this one, I'll get 2 all through because it is looking in the correct range all through, but it is looking for marketing all through as well. So I need to update what it is looking for. So I can do that quickly by just typing in what it is supposed to look for. For this section, it should tell me how many people are in cleaning, how many people are in HR, how many people are in IT. So I'm just updating the criteria for what it's supposed to be looking for. And the sales. Sales. Then we have support as the last one. So what you notice, this is linked to this. So if I change any values here, so for example, if I have more people, let's say I switch, let me change one person from support, and let me just, or let's change from cleaning, let's call it support. You'll see, we'll update that. So there's no longer anyone in cleaning, they're now called support. Okay, so same thing, if I updated one of these sales to HR, the data will automatically pick the change. So there will now be 3 HR, and there will be less, the one I reduced, less sales, right? So I didn't have any age here, so I will leave this out, or I can quickly, actually it's part of what we can do. Suppose we wanted to insert age here. We already have these columns. How do we add a new column? How do we insert a new column? We can insert a new column by just right-clicking just after where we want, or where we want the new column. I want a column here called age, so I will right-click there and insert. Then I get a blank column and I can say age. Then I can put some random figures. Let me just pick some random numbers. 33. So these are people working for that company. What organization it is. We have a few people above 40, people in the 20s, and so forth. So we can decide to include that in some kind of analysis. So suppose we want to get the average age of people in marketing. For whatever reason, we want to collect some bit of demographic information. So we can use a function we used last time. So we can use average if. Okay. So we are looking at a department, then we will average the age. Let me switch this to. It does look like the numbers. It will look more natural if I switch this. Yeah. So notice what I've done. Let me just repeat that exercise. Suppose I wanted to swap this. What I've done there is selected this, copy, Control C, and I've just gone where I want it and done that. I used this, right clicked, and insert copy the cells. Okay, then I will need to delete this. So what I've done there is insert copied cells. The only problem that creates is the range for this now becomes wrong. So I need to reselect this. So let me do this quickly. So highlight that the range was this. I needed to press F4. formula. Okay, back to what we were doing. We were trying to, no, it doesn't fix it completely. I still have a problem of needing to change this. Let me use a shortcut for this. I can use this. So it will check for K16 there. This will check for sales. I'm using absolute reference even for this section. In other words, even this, it will just look for support all through. In IT, instead of typing it there, I just reference it this way, and then I press F4 so that it will look for the whole range for the same thing, amounts, correct numbers, right? So we were trying to get average age. So we kind of updated our worksheet here to include age. So what we want to do is to get the average age by department, right? So we will need a function for that. We will use it's called a conditional function again. So we will do equals average if. Average if. Okay, so, and you will notice this one has 3 variables we need to insert there, 3 parameters. Okay, so we want to check here. We are looking at this section, and we are looking for people in marketing. So we want again to fix, let's just fix this. Remember that thing we talked about, absolute reference. We can do it right now, so that we do the absolute reference this because we will be using the same range all along. Then we press that, then click on marketing, or we could write marketing, but let's go with clicking on it. So it will be looking at that range, searching for marketing, and what will it be averaging? So if you look at that, the template that was there, it asks us the average range, which is this thing here, average range. So in other words, say where you're looking, what you're looking for, and what will you be calculating. Okay, and then we want this also absolute with an absolute. So if I do that, it gives me an average age of 30.5 for people in marketing. So if I look at those 2 people, it's 28 plus 33. What it has done is that it has added those 2 and divided by 2. Okay, so just to review that formula a bit, let me zoom it in, the font a bit so you can see it better. If I did that, then move this a little bit. So it is average if. This refers to the range where I'm getting the category of people I'm looking at. I'm looking at the departments, and then what am I looking for? This is a specific department I'm looking for in this range. In the range D2 up to D13, I'm looking for. This was referring to marketing. Sorry that I've not written the name this time round. Then this is what I am averaging. This E2 to E13 is where I am doing the calculation. So it has 3 parameters: the range where I am looking, what I'm looking for, and the calculation, the range which I will use for the calculation. Average if, and it works very similarly to sum if. If we wanted, for example, to get the sum, how much you're spending on each department on pay, yeah, we could include a sum here. But we can include that here. Let's just add it here, sum or total for the department. So you spending pay for that department. Okay, but let's do average first. Suppose we wanted average pay. It's very similar. It's only that this time we will be doing the pay instead of the age. So if I already have the formula here, one thing I can do is just copy the formula over. Okay, you will notice it just writes 30.5 because everything here is frozen. So it is looking in the same range, it is looking for the same thing, and it is averaging the same thing. The same thing here is, if you look at that, that was the age. It even highlights it here. So what we want to do is to change that last one to, let's say we are averaging the net pay. It's just that last range I will change. And again, use F4, press enter, then it will tell me the average pay for those. For this will be, the first one will be correct because it's for marketing, but if you notice, we have not changed this, so it will be doing marketing all through. So we have to remember to update this one as well. Where it is looking, the criteria. So we need to do this, light it, click on this support, and so forth. So the one way I could have avoided this is to could have copied everything across. So if I did this, let's see, we had done K15, we had updated this. Anyway, let's quickly update this one. Control Y. Okay, so let me change this to not fix this. Yeah, I'm thinking through this formula. I think I don't need to fix this one. I want it to change as I copy it downwards. So I will do that and it will give me the right fix now. So what it is doing, let's see if this is correct. So it has checked in K15. This one has checked in K16. This one has checked in K17, and it has checked in K18, K19, and then there is no one in cleaning, so it is not finding any data. It has not found anything called cleaning. Now we don't want this to happen, so we can improve our formula to avoid seeing hashes. We can use if there is no result, then we get a 0 or something like that, but that will complicate the formula. But we can modify this to apply what is called error handling. Like if it is, there is an error, then it puts a 0. You can use something called if error. Then we say 0. Now that makes the formula rather long, but what it does is, this is what we are using, but we are saying if this generates an error, it will put a 0. Yeah, that's what it does. It's used for error handling. If there is an error in this formula, it will put a 0 instead of having those hashes, or you can have another form of error message, right? So what I want to do is to copy this across. So with spreadsheet questions, sometimes you have to do some thinking, even when you know it very well, like we have just discovered here. I was freezing this range, which I think I didn't need to. I wanted it, ideally it should be changing. As I scroll down, it should be moving from this one to this automatically. So that saves me the work of typing the departments, like I type marketing, then type support. It makes it a very long process. Let's see, I'm too fast. Eh? All right, I will slow down, Joroge. So what I'm saying is, this average if, did you understand? I hope you understood what average if does. Average if calculates the average of a given range, but based on a condition. So like we are getting the average age by department. That is why we are using average if. We are not just getting the average of the whole set of data. We are getting the average by department using some criteria. Average pay, we will be getting, again, the average by department. So we will still, in this case, use average if. So let me repeat the average if. I see, that's correct. Okay, so average if. So I'll start with an equal sign, right? So average if, I will just write the function, right? Then I will look at this prompt here, or this template. It tells me to provide a range. Where am I looking? I'm looking at the department. So I have fulfilled that first criteria. Okay. Then to make this, to lock this range, because I don't want this to change. I want to look in the same range every time. I press in on my computer, because I'm using a laptop, I will press FN. FN is a function key somewhere at the bottom left of the keyboard. Then that will allow me to select the function keys up at the top of the keyboard. But that is only for a keyboard. If you're using a desk, or rather for a laptop, if you're using a desktop, you might not need to press the function key. So it will have a slightly different format, that keyboard. But I imagine most of you probably will be using a laptop. So it will be FN, then F4. You hold down the FN key at the bottom, F4 at the top. That locks the range. Then we said for this range, you don't need to lock. Then what am I averaging? This time round, I am doing the net pay. Okay, so this is the average range, the range I need to do the calculation on. So I can quickly run through that. I am looking here. This will have the list of departments. This will tell me what I'm looking for, the K15. Then I will get the average. When I find marketing, do the average for marketing. When I find support, I do the average for support. Again, I want to lock this. So FN plus F4, and I get my figures here. The formatting, again, I need to make this 16. Now this division by 0 is an error, so I can use error handling to cover that. Because there is no cleaning, what it is doing is, it is because it's an average, you know, average is, it will take the total number of items, then divide by the number of items there are. So in other words, it will count, there is 0 cleaning people, but then it will divide that by 0. And if you divide things by 0 in maths, you get an error. So what I will do there is apply some error handling. So notice I'm not changing the formula too much. I'm just adding, if there is an error, then what will happen? I'll put a comma here at the end, and I will put either error or 0. You could even write the word error if you want to do it. But we don't want appearing, let's just say 0. Because the average pay is 0 if there's 0 people. That is. Or you can have any other error message. If I did this, I'll get the word error. Okay, so hope that makes sense. So if error sometimes is quite useful for coping with any unexpected things happen. Okay, so I can either put an error. For example, if somebody entered, instead of entering an age here, they entered something like 29. So if they did that, then probably it will have a problem calculating, although in this case it has not generated any error. It would, in other cases, you can tell that this has changed, something has changed here because it has not taken this text into account. So it is 28.5 in reality because it cannot calculate using text. All right, so that is a bit of a few more functions. I've gone through average if again. So we had said we can do sum if. The logic is the same. Suppose we want to get the sum of the pay by department. Okay, so it's same logic, except that this time around we are doing the sum. Okay, so these functions, I know they start getting a bit more intimidating as you go along, but once the logic of it clicks, then you will see it's not a very hard function. So what we want to do is to tell how much are we paying the people in marketing, total, how much are we paying the people? How much are we spending on the people in IT? Okay, so it's kind of a realistic analysis what I want to do. So I'll want to do sum if this time. Okay, so I'm still looking at departments. Then I will do the FN and F4 to lock that range. Then what am I looking at? I'm still looking by department. Okay, then I will put a comma. And what am I summing this time? Still the net pay. So we want to know in total how much are we at. So I lock that range and I close the bracket. So it will give me the totals by department. So let me increase the font of this. And it will tell me marketing people, we spent 3,003. Let's see. Oh, that is these two figures. I was looking at this one. Which says, so it is this plus that. Because we have used the net range. Support people, we have spent in total 8. Let me copy this down. We spent in total 1,794. So in other words, it has looked for support. It has added that to that. Give me the sum for that department. Okay, so it's a very useful function depending on what you're trying to look for. Very useful function for summarizing data or analyzing data. So that's a few more functions. What I wanted to do also here is so what I wanted to do is to also use some other set of data to talk a little bit more about, just summarize the functions and the formulas some more. Let's look at a different set of data. So suppose I had this data here. Okay, this is a long set of data. I can use it also to do some of the same things. So this is a summary of the different formulas, some of the ones we did last time. So you know how to, this is addition, subtraction, multiplication, and division. So quickly running through that. Addition, suppose we wanted to add quantities, we say this one just add directly or subtract. So this one we will not dwell on. Subtraction, you just use a minus sign. But average, again, suppose we wanted to get the average quantity. These are it's a very long list. What I wanted to use this to show you also, suppose I had a very long range to select. If I do this, and I want to get the average of all these figures up to the bottom, this spreadsheet has about 2,000 different records. So one way I could do it is drag this down up to the bottom, keep going all the way up to the number 2,000, which is quite a long journey. So what I'll do instead is, on the keyboard, I'll hold Control and Shift. Control and Shift down, then I press the down arrow. Control Shift down arrow. So that's a shortcut. It selects the whole range. If you think about it, look at this. It keeps going. It's actually not 2,000, it is 89,522. So it's a lot of data. So it would have not made sense for me to try and scroll down all the way. Okay, so Control Shift down arrow, it selects the entire column. Okay, so that makes my work easier. So I will not need to scroll all the way. Let me do this quickly. If that automatically selects the correct range, then I can go back to the top. And if I press enter, the average of all these values is 12.9. Okay, so in very few strokes, you've been able to kind of analyze a lot of data. Remember, we've seen these are 80-something thousand records. So, but the average of all these quantities is 12.89. Okay. So suppose I wanted to do a sum of all these things that are in this column. I can still use the sum function equals SUM. We've come across these simple functions before, so it's just a bit of a summary together with shortcuts. So if I do that, I am assured, I don't even have to check, I am assured that it has gone up to the bottom, but I've just used Control, Shift, and down arrow. Then when I come here, use the bracket, center, then the sum of all this is 1,930,000 something. Okay, so that is another two things. One, a shortcut and a review of the sum function. Sum if we have just looked at, we have said sum if is a conditional calculation. So we are summing things that meet a certain condition. So suppose we wanted to use to sum things that where the quantity is, let's see what would make sense here. We want to count things where the quantity is above 20, for example. Okay, that's count if. Suppose we want to count the items, whatever these products were, products where the quantity sold was above 20. So we can do count if equals count if. So we're counting the products. So again, Control Shift, press down, select everything. We want to see categories where the sales were above 20. So I will lock that using the absolute referencing we talked about. Then I put a comma, then I will, this is what I want to count. Criteria where this is above 20. Now that introduces an interesting twist. See, in the other case, we were just counting things. There were marketing, there were departments, there were text. So how do we count something that is greater than, is less than? We have to use a formula. So we say greater than 20. It is counting. So I need to change this range actually. It should be, it is counting range D, where the item is greater than, number of items is greater than 20. So I've looked in this range, and out of these 89,000 and something products, 12,373 of them had a quantity of above 20. Okay. So it kind of simplifies. It would be a very hard thing to look through the list and determine the ones that are above 20, but the formula does it for you in a few seconds. So looking at that again, I specify the range in where I'm looking and the criteria. So the criteria we've seen this time round, if we are talking about something that is greater than a certain number or less than a certain number, your criteria has to be in numerical form this way, but it still has the speech marks. So it is looking in this range for things that are above 20. Right? Now, so let's walk through this one. Sum if, in this case, again, we can look for a field where we can sum. So suppose we want to sum with a condition. So we want to sum, there is this, if you look at the order number, there are different orders here. Let's use the order number. So suppose we want to sum the quantities just for the order number 53,993. Okay, that would make sense. So that equals sum if, then this is the range I'm looking at. So these are sorted, but in some cases they might not have been sorted. So then I want to use the criteria, this one. So the idea is I will sum those things that are, give me a minute, a second please. sum if I was checking this range, the order number, and I'm using 53,993 as our criteria. And what am I summing? Let me sum the item totals or the quantity. Let me use the quantity. So I will keep this open, keep this here, then I will do the item totals. So in this case, I just want this to be fixed. So I'll press F4, then I will get the total. Then lock the range, the center. So what it has done there, it has counted the total of the items that meet this criteria. So my criteria in this case, it is 5393. The order 5393, the total quantity of things is 171. The only problem is that it has again put some decimals. If I'm counting things, I probably don't want decimals. This has to do with formatting, which we looked at a bit of last time. You can reduce the decimals because it's just a number, it is not currency. So reduce that and it gives me, it has given me the sum of these things. So these have been sorted, but in reality, sometimes they might all be mixed up. So it might need to pick them from different positions in that range. Okay, so that's sum if. Count simply counts. So this one is not a complicated. If I just wanted to count how many items are in this range, if I use count, let's see if it will count for us. So it should give us the actual number of items. If I do that, let's enter. It should give me the count of everything. So simply count the range. It tells me there are 89,521 items. Okay, so it has just counted everything in that range. Okay. Count A, on the other hand, count A is related to count, but count A specifically counts things that are text. Okay, so if I had now the names of people, let me see if I had some names of people in our initial, in the worksheet we were using before. Let me go back to it. So if I want to just simply count the total number of people here, then I can do equals, if I use count, see what will come through. Look at that. When I use count, it gives me a 0 because this is text. But for me to count things that are text, I use count A, count A. Okay, so it has the word count and an A at the end. So it is used for counting things that are not numbers. All this is different functions. Okay, so what I was doing here is giving you a bit of a summary of some functions. So what we can count in this worksheet is probably these things. These are the only things we can count using count A. If we did count A equals, and I did count A, then open a bracket, then I use this range. I expect to see the same number as this other one, because this time round here I was counting the order number, here I was counting the product description. Those two should match because one of them is the order number, this is the description of the same the item matching that order number. Small distinction there. Count only counts numerical values. Count A counts text. Now, I'll just do these ones quickly. Then I will not do VLOOKUP today. It's a relatively more advanced one, but I will do it at some point. But let's look at the if function again. So suppose I want to use the if function to come up with a name of the category. So those sales that are above 50, for example, I will call them high sales. And sales that are below 50, well, let's use 30, for example. Sales above 30 are high, sales below 30 are low. So I can use a function, an if function. So I'll do something like this, equals if this quantity is above 30 is what we have used. So if this is greater than or equal to 30, then this is high. Consider that a high sale. Else, this if function in this case has only two possible outcomes. So it has a condition. If that condition is true, it will write that. If the condition is false, it will write that. So I'm putting some two categories based on the quantity here. So if I do that and autofill, lots of things are below 30. Did I say 30? Or if it is equal, greater than 30, then it is high. If it is below 30, it should be writing low. Oh yeah, I'm using the quantity. This is what I'm looking at. So if you look at all these, they are below 30, then this 60 is above 30, it has written a high. Then I can even use another function to calculate, to count how many, suppose I wanted to count how many things are high sales. So I can use high sale numbers for further analysis. High sale number. Then I can use one of the functions that we have already learned to count how many items had high sales. You can use equals count if, then I use this to select that range. Then the criteria there, I can say high. Tell me how many had high sales. So it is 5,643. Okay. But if I just try to judge it by scrolling down, already it seems like there are too many low sales. But remember, these are 80,000 plus things. So it means out of those 80,000, there is about 5,000 of them that have the word high on them. Okay. So that kind of just reinforces the idea that a spreadsheet is very useful for working with lots of data that would be unrealistic for you to try and analyze as with your bare hands without an additional tool. Okay, so high sales are those, and I've used count if again. Okay, now that kind of summarizes the if function. The if function is used when you want to apply a condition to something. What I will end with is I will go back to this worksheet and just demonstrate one more use of the if function. I just use the if function here. Suppose these allowances, remember we had a fixed figure. We say the allowance is just 20%. But in reality, sometimes the allowances are given depending on your income or depending on some other condition. Same as taxes. People are in different tax brackets and so forth. So we can apply some condition even when doing these calculations. So let's use an if function for the allowance. We will say people earning more get a bigger allowance, and people earning less and a smaller allowance. So this 20% will keep it for people earning below $1,500, and people earning above $1,500 will get, let's give them a little more, we give them 30%. Okay, so this allowance has two categories. There's two categories of the allowance. One group is getting 30%, another group is getting 16%. How do we include that in our calculation here? Now, we will hopefully make a recording of this available for you. I know sometimes it's too much to take in, but we will make this recording available for you at some point. So we say, because I want to use if to calculate the allowance, we're saying if this pay is above or equal to, we're saying 1,500, then the allowance is 30%, and it is 30% of what? It has to be 30% of this. We have to specify it, 30% of what? Then 20% of, so two conditions. If the pay is above 1,500, the allowance is 30%. We have to specify of what. If I just wrote 30% without that number there, let's see what it would do. It will write 0.3. 0.3 is because we have not told it it's 30% of what. We have to say it is 30% of the basic pay. The other people who don't meet that criteria will be 20% of the basic pay. So if I do this now, I have used a conditional formula to apply to give allowances. It is not a blanket percentage for everyone. Okay, and we can use a similar thing. In reality, you might have different people being taxed differently depending on how much they are earning as their basic pay. So you will have that somewhere on a table, the different ranges of tax brackets. Then you can apply that conditional formula to work out the actual amount, right? So what I want to do is to bring it to a close. I had intended to spend part of this lesson purely talking about keyboard shortcuts, but I think we will have to do that next lesson. So in the next lesson, I will spend less time talking about new formulas and functions. I will spend more time focusing on one of the clear objectives listed on the syllabus is you need to learn some keyboard shortcuts. So in the next lesson, I'll be talking more about some additional keyboard shortcuts. Otherwise, that's quite a bit of Excel to take in. And thank you for being a good audience, and we will see you next lesson.
And we talk about intellectual property rights. And these are rights that are awarded by society to individuals, organization over creative works. And they give the creator the right to prevent others from making unauthorized use of their property for a limited period of time. We had given the example of the Coca-Cola secret ingredient, even the shape of that bottle, the KFC logo. These are intellectual properties that you can't just wake up in the morning and decide you're also going to copy them, so to speak. So we have patents, copyrights, and trademarks. And patents, it's a certificate that you get after you make an invention. And it's a judicial relationship between an inventor and the state on the other hand. You as the inventor, you're the one who brought out this new process or new invention, and you hold the right. So in Kenya, we have the Kenya Industrial Property Institute that registers and issues that certificate. And the criteria for a patent is that it must be new. It must not have existed before. We can think of Jiko Okoa. It's a new invention. While we have had the old Jikos in existence for the period of years we've been using them, this one was a new invention. And it must constitute an inventive step that must not be that obvious. You've gone further and modified or added a new twist to something. It must be industrially applicable and useful. It's not just for aesthetics. It's not for the beauty, and it's not for the sake of it. It must make an impact. And the impact must be felt not only by you, the creator, but by others. And this invention must not be excluded by statute. We're saying we don't want illegal inventions, or we don't want anything that will put people at risk. And KIPI has the discretion to grant or decline to award a patent. But where it is granted, there must be an application to register it. You disclose it to the state, and you're given that certificate for a limited period of time, mostly under 20 years, under the Trade-Related Intellectual Property Convention. And this patent can either be obtained by you as a natural person or a juristic person. A company may also be able to obtain it. And in this instance, we can think of KEMRI. If you're working under KEMRI and you discover something new, it's not you who will get that patent. The patent will be granted unto KEMRI, as long as you are doing it within the course of your work, within normal working hours, and you had agreed prior to making this new invention that your works, so to speak, belong to KEMRI. This is what we are saying. It may be granted to juristic persons. So inventions made in research institutions belong to those research institutions. They will not belong to you, even if you're the one who has discovered and you have done the hard work. As long as you do it in the course of your employment, it belongs to that institution. So you, as the patentee, your rights are to be granted a patent subject to the substantive and procedural legal requirements. You have the right to import, to sell, or to use the product covered. And you have the right to exclude others, outsiders now, from dealing with that product. And you're also given the right to exploit the patent through contractual licensing and assignment. And where it has been sold, you have the right to enjoy the royalties that will be received. You may have the rights, but you also have obligations. And one of the obligations is to disclose the invention to KIPI, and you give all the information concerning the applications, the grants. If you have been financed by a non-profit organization outside Kenya or within Kenya, then you have that obligation to report that you are being supported monetarily by another organization. You're also obligated to refrain from unfair, abusive, and uncompetitive terms and provisions when you're granted this patent. You're prohibited from becoming abusive, becoming unfair, or doing business in uncompetitive terms, frustrating the rest of the business owners in that trade usage of yours. So you're prohibited from doing that. So when there's an unauthorized use or dealing with a patented product, which conduct will go against the claims, then a case on patent infringement may be brought. And if you're the one who has been found, then one of your defenses would be, it lacks novelty. It's not new. It's not something that is different from what we have been using. So you can't claim you have done something, you've created something new. It would be a defense if I am found using the designs you used to create another jikokoa. And my defense would be, but it's not new. It's not something that is starting to exist. Rather, it has been in existence. And the remedies are normally injunctions, damages, account of profits, and delivery. So where you are told if you are making these duplicate jikokoas, you are told by the court to stop and cease the actions that you're doing that will cause another harm. You may also be taken through the criminal sanctions way, but due to the fact that more often than not, when it comes to patents, when it comes to intellectual property, there is lack of, or there's limited knowledge. Yes, limited knowledge on that bench. The magistrate to whom you're taking the case may not have the issues to be discussed as an expert. Say if you have a magistrate and you have an expert in those energy saving jikos, where you're not 100% sure of what is going on and what is making your design different from another's, it may be frustrating. But we also understand there are no experts per se. Theirs is through case law, through those following of those procedures. Having dealt with patents, now we can deal with copyrights. And copyrights are economic rights given to creators of literary and artistic works, and include the right to reproduce the work, make copies, perform or display the work publicly. And copyright law is intended to reward original expressions embodied in tangible material or fixed form. An idea does not infringe copyright, but once it is expressed in some form, it becomes tangible. And once it becomes tangible, then it can be misused or taken apart by another person. An idea is not tangible. So you cannot sue another person for stealing your idea, especially when it is not written down, where it is not, if it's in your head, there's no paperwork to show what you've been doing. It has not been converted from the idea to actualization, then one cannot claim copyright. And the subject matter of copyrights, they're either primary works, and these are original authorship. And they include poems, softwares, sermons, paintings, the Mona Lisa, that painting which you're not allowed to recreate. And those are the now original works. We also have the other category of secondary works. And they're related or allied. And in these, we think about the films, we think about cinemas and sound recordings. So we have rights of copyright, and copyright subsists automatically upon the creation of the work. It need not be granted or registered. The fact that you've done it is enough. It will not need to go to a body to determine, is it novel? You see, in the patents, KIPI needs to determine that this thing is unique. It's not been done before. Then once they determine, then they can register, because it's for 20 years only. And KIPI will do the tracking and the usage. But for copyright, you need not take it back to anybody. You just need to do it, and it's automatic upon the creation of the work. If it's a painting, it's automatic upon that. If it is a song, or if it's a novel or a poem, automatically you get that. Number two, it is that it governs both primary and secondary works. We have indicated primary works, the original authorship, and secondary following quite closely. They're governed by the rules of copyright. And more importantly is that the subject matter must be original. It must come from you and no one else. You have not copied, you have not gotten ideas from outsiders. It's simply you. And you remember, if I can't be assisted, if I see you, George, having done something great, and then I keep saying, oh, it was my idea, I had talked about it with George, this is how we are going to do it. You remember, an idea can never be copyrighted. And a copyright subsists for the life of the owner plus 50 years. So if the owner lives up to 100, this one who has written these poems, if that owner lives up to 100, add another 50 years for that copyright to exist. So what do we do when this copyright has been infringed? An infringement is dealing with that controlled work, controlled by copyright, in a manner contrary to the interest of the owner of the copyright, without his consent, authority, license, or permission. And the conduct of that defendant must be seen as to contravene the reserved rights to reproduce, communicate to the public, broadcast, and perform the work. You see, with copyright, you may make copies as indicated. And this is why you find that there are documents you are able to download, but you're not able to convert them into any other format than that which is prescribed. It is the element of copyright, you protecting your original works. If I have come up with a recipe and I intend to share with a few friends, then I put it in such a way that you're not able to copy paste it as easily as you would want. You're not able to infringe on my rights. So how do I prove that I have infringed on your rights, George? One, there must be similarity. It's a matter of fact, and in music is difficult. This is probably why we are hearing currently in our country that old song that past generations were used to. So when it's put on, they assume it's that song. But in reality, it's a new song by a newer individual. You hear that the beats are similar, the words are different. And this is why we are saying in music, it is extremely difficult. There must also be evidence of access. How did I come to know you painted that Mona Lisa? You must have invited me to your home, shown me where that painting is hung. So should anything happen, we determine it as infringement of a copyright. Once I come up with a drawing so similar with that one of yours, people may be unable to differentiate which is the original, which is the correct one. And the defenses that we have to infringement is that it's fair dealing, where you use work for criticism or review or private use, and you're able to tell the court, no, I did not use it for any other thing, but I have done that to review, to give feedback on how it should be done. Then it's a defense if the copyright is used for the benefit of the public. Then you cannot again plead differently that my copyright has been infringed. And the remedies include an injunction. Stop using George's poem. Stop quoting him and not recognizing the source. And number 2 is the damages, whereby I'm restored. People assumed that this is the Mona Lisa. You duped people and you have put my character into, you have assassinated my character. Then I will need you to restore me to the position I would have been had you not infringed on my copyright. We then move to trademarks, and these are words or signs to indicate the correlation between goods and services and the owner. It's a distinctive symbol that identifies particular products of a trader to the general public. And it may convince of a device, words, or a combination of these two. For the trademark, we are not limited to just use words. Again, we are not limited to just use diagrams. You are given that leeway. It can be anything. And they're granted in order to distinguish between the services and the provision of goods. So the examples of trademarks, the Toyota logo on the car or the Mercedes signage. Then we have headings and titles on products or papers, how they are done, how they are able to be rephrased. And a trademark, remember copyright, we have said whether or not you register it, it exists. The patent must be registered, and a trademark as well must be registered. And they register by sending a written application to the registrar, and the registrar will advertise that there's an application for a trademark. Then he will look at the opposition, and within 60 days, you'll have your solution. You'll be able to proceed. So why do we use trademarks? And one is to distinguish the goods of another traded from those of another. Pepsi and Coca-Cola, Miranda and Coca-Cola. You're able to differentiate based on the shape of that bottle and that unique taste. Yeah, also, you use trademarks as well to refer to a particular quality. When you talk of designer bags and you associate Gucci with class and expensive goods, it gives it more weight that you only need to remember how Gucci looks like, then you're good to go. Trademarks also protect the investment of the inventor. And it's also used to promote the marketing and sale of a product when one has a trademark, such that if I see you walking with that soda that has that unique shape, I would want to also find out, are all of them that way? Are all of them shaped in that manner? The shape has attracted me to your soda. And we talk about trademark infringement, and that is the use without license or approval. And what our defense is where we say there's no title, the trademark. It's not yours. So you cannot again go back and sue me for using it. If it's not yours and it's not mine, then that's another issue altogether. So where you have not registered a trademark, that is a defense to the infringement. So we talked about that promoting and marketing when one has a trademark. The shape of that bottle, the taste in it, it becomes the basis of marketing. So in the infringement, we talked about the non-registration. If you don't register it, then you cannot sue for infringement. Again, there's the non-use of the trademark, where I may have registered it, but I haven't used it in the sense of that trademark. So those are the defenses in the trademark in infringement. This is what we are saying, that the trademark is used to distinguish the goods of one traded from those to another, particular quality. It protects the investment of the inventor, the labor capital, as well as the goodwill, although that has been questioned to have no legal basis. And it's also in identifying the origin of a product, where we were talking about Gucci shoes, automatically you know where to get them. When we ask ourselves, what is the role of professionals, advocates or certified secretaries in land transactions? Advocates perform the due diligence. They will go do a search. They will identify whether you have a clean title. One, whose name appears on that title that we have presented to you. If it's George, good, issue number 1 resolved. Number 2, are there any, remember, we talked about encumbrances. So does that title have any charge or any mortgage attached to it? The advocate will be able to identify and show you how best to deal with such an issue. Because if it has been used to secure a loan, then the owner cannot sell it until they have cleared that loan and again gone back and said, we cleared the charge from our title deed. So the advocate also provides guidance. They also they witness the signing of the sale agreements. One, they draft the sale agreements and they have the terms and conditions that if you're selling your land, are you selling with all that is on it, or will you be given time to harvest? Again, that advocate, once they write down that sale agreement in land, then they provide for ways of resolving disputes. That before you and I are very annoyed and we don't want to deal anymore, We remember that the sale agreement we signed provided if we can't get along, we will need to go for alternative dispute resolution. And it will have saved us both the embarrassment, the issues that may come with refusing to honor the obligations of that sale agreement that we sign. So that essentially be the role of professionals. They are giving advice, they are following up to ensure that the title is clean, it has no encumbrances, no issues attached to it, there are no relatives fighting for that piece of land. And once the sale agreement is done, the money has been exchanged, and the one selling has given out the title deed. So for the one buying again, must take that title deed, attach the relevant documents, go with it back to the registrar so that the records are changed. They reflect the buyer. They no longer reflect that seller. So these are the roles of advocates, to ensure that you are not sold ideas and dreams, that whatever is being sold is physical, can be touched, can be seen rather. So advocates provide due diligence in these transactions, and where there is that element of the money will be paid in stages. If you went and you got a piece of land, someone sold you a piece of land, but unfortunately you come and realize that the piece of land never existed. You are actually taken to view someone else's home, and you take this seller to court, and the court determines that they will recover the money, that part of the damages we have said, part of the obligations. Once an issue has been found, part of the remedies include damages, and where the advocate will be the intermediary. Instead of sending that money back to me directly, it will pass through my advocate. They will determine whether the payments have gone on as per schedule. Now that you took the person to court, so the advocate will find out, are these issues being sorted out as they should, and how are they being done? So they provide that guidance. They provide a way forward of dealing with things. And having said that, we have come to the end of property law, the law of property.
Right, so I have some data here and some tasks I've set up. I'll share this with you afterwards, so you can also have a go. Right, so let me move this out of the way. All right, so I have some data here and some tasks. The first task I've created is inserting a row at the top and adding a title. The title should be staff basic information. So how do we insert a new row? Right click, insert. Okay, we've done this before, so it shouldn't be a problem. Insert, then we'll do type the title, staff basic information. And we can start with some of the shortcuts. I want to, let's do this. The first one has to merge this, the title in the range A1 to J1. So I will highlight all of this and go to home, merge and center. Right, merge and center, and probably I did not include it among the tasks, but If I do Control B, that's one shortcut. It bolds the text. So I can also increase font size like we have learned before. It just looks a bit more like a title, all right? So for this section, the title of the columns, I can do Control B as well. If I want to italicize them, I can do Control I. That makes them italics. And notice some of them overlap sometimes. So if you have something like this, for me to display it, I'll go between where the two columns meet and double click where the two column letters end. Like if I wanted to adjust the space between E and D, I will just double click between E and D. Right, I hope that is clear. Okay, so we are doing a number of things all together. Remember, like I've said, for this lesson, we want to go over a number of shortcuts. I'll do a summary in the end. So we have already done Control B, Control I for this. Then suppose I wanted to do a bit of formatting. Again, some things we have done in the past. Control, then I can put, or rather Home tab, then I can put some borders so that my data looks a bit more interesting. I can also apply some color and so forth. We've done this before, so I'm just doing a bit of a recap. Formatting, we said presentation of your data is quite important. So then let's do the last bit of formatting here so it looks more interesting, more catching to the eye. Appealing to the eye, yeah, that looks more interesting. All right, so we are on task number 2 here. We have marked and centered this over that range. So this is some of the content I intended to introduce today, creating some validation rules. Validation rules put some restrictions on the kind of data that you can enter in a specific range. So it could be restrict them by number, restrict them by the kind of text that should go there, and so forth. So like here we have said the rule should be the age. The rule for age should be only people between 18 and 70 should be allowed. So people who are adults, basically, who are within the acceptable working age. After 70, they will probably be retired. So what we want to do is create a rule. Step 1, you will highlight the section where you want the rule. That's step 1. Step 2, we'll go to this data. Okay. One way to get, another way to get there is, there are shortcuts for that, but for now, let's use this long method, data. Okay, then I go to data validation. Data and data validation. Then I'll click on this. Right. Data validation, then I want it to accept only numbers between 18 and 70. So I'll come here and look at this list. I probably want whole numbers. So the choice you make here depends on the kind of numbers we want. For ages, let's say we will only include all numbers for age. Then we want between, so we keep this between. If we wanted only above 18 without an upper limit, we then say something like greater than or equal to 18. But right now we want between, it has a lower limit and a top limit. So we will do between 18, that's our minimum, and 70. We can use this to restrict the data that will be input there. If I click OK, then if I try to enter anything here that is outside that, so it will give you an error message. It is invalid data. Okay, and I can also choose my own, create my own error message. If I went here and edited the rule, I go to validation and I want an error alert of my own choice. So notice this is settings. I can create my error alert here. I say invalid entry. Tell them enter. So a more meaningful error message. So if I do something like now I enter something like 75, you see invalid entry, enter the correct age. Okay, so then the person will be reminded what they want to do. You can even make it more explicit by, say, for example, telling them what they must enter. So enter an age between 18 and 70, so they know what the problem is. Okay. So if this happens, then the error message is even more meaningful. We can put some random ages here that meet the criteria. So we do a bit of data entry. Still working. Data that is acceptable. So I've entered some values there. So let's try the next one here. We want to create this task here. It says create a lookup. A lookup. So the question is, what is a lookup list? So we want to restrict the kind of thing that can be entered here. It's still a validation rule, but this time we want it to, the person is given only two choices. They're supposed to, the status is either supposed to be married or single. Okay. Make sure you alert me if there's an issue. If you cannot see my screen, let me know early enough so I don't go too far without us communicating. All right. So I'll say this section, we want to create a validation rule. All right. So highlight that section, same procedure used for the other one. Then we go to data, then data validation. And this time round, on settings, we'll choose list. Okay. Then, because we are not getting our list from somewhere else, we will not click on that. Instead, we will type the options. So I'm just typing the options and I'm separating them with a comma. Okay. That's simple. Married, comma, single. So there will be other contexts in which you will want the user to choose something from a list. You're not giving them many options. So for example, let's say you are creating a simple system for charges. Let's say there are charges for entry to a national park or something like that. So there will be categories of people. There will be people who are citizens, people who are residents, people who are non-residents. Only like 3 categories. So you don't want somebody to enter other options. So if you look at this, one is restricted to only entering what is on the list. If I try typing something else, let's see. Sometimes it will refuse to accept that because we have created our rule to only accept either married or single. For divorced. Okay, so if we do this, we can now enter data from there. This randomly. Okay, so I'll ask you to retry this on your own, but I'll be sharing this worksheet in a bit. I'll give you time to retry it. So let's see if we are making progress. So that is data validation, restricting text entry. Okay, so we have just a quick rerun. I have highlighted the section, gone to data validation, then this time round I chose a list. Okay, you would choose decimal if you want decimal values that have decimals. So let's say, for example, you had a worksheet where you had currency or something like that. You want to provide for some decimal values. Okay, if it is a currency, like for example, these places where we have basic pay, if we want a restriction, let's say people must earn above the minimum wage, so we can have a bottom, a lower limit. But when we're choosing that, we probably want to use decimal because it will have decimals at the end. So that is a quick rerun of this. Okay, I think we have not looked at the other options. Let's see what else is there. There is list, whole number, date, time, text length. We restrict it by the text length. So if we only want, let's say for example, there is a field that should be an ID, staff ID, like this one on this side. You probably want to reduce the chances of an error by restricting the length of the number of characters that people can enter. So for example, for my ID field here, I can restrict the number of characters, say, to 5, so that there is less chances of people making an error. So I can do this and go to data validation, then I say text length, then I can have a minimum of equal to. If I say equal to, it should be, in this case, let's say it is 4. Then somebody must enter some 4 characters. Let's try to enter something shorter. That one is, let's try it here. See, if you enter something that does not meet the condition, then you get an error message. So validation rules are very useful for helping you capture errors. Like when during data entry, if there are already rules in place, they will prevent the user from making certain errors. Okay, so those are a number of rules. Let's see the department. These people work in certain departments. Let's say we have a number of departments, which we can also use a rule to create. So I will do a number of departments using the same procedure. So I go to data entry. This time it's a list, like I said. Then I say I have HR. Let's say there is sales, it's marketing. Well, let's say sales and marketing. Say applications and so forth. Right? So if we do that, then I get a list of options. So some of these are in sales. Let's say this one is mean. So we can then pick this randomly. For our purposes here, I'll just pick it randomly. Sales, marketing, say IT, communication. So the point is, it helps you data entry. So I don't have to go typing the whole thing. I just type the first character, it picks up the. Okay, so I can do more. I have then sales, right? So it helps with data entry. Right? Remember to ask any questions if you have some. Just make sure you don't go too far when you are not following. Then, basically, I will, let's see, are we still following the tasks? Let's make sure we're doing that. So we have create a rule for basic pay so that it does not allow figures below 15,000. Okay. So we want to create a rule so that it does not allow figures below 15,000. So I will do the same thing, like data. And if we look at the options here, we'll still do a whole number. And this should be greater than or equal to 15,000. Say OK. Then it will have a restriction here. So I can now put some basic pays. Let's say I have this one as 55,000, 60,000, 20, this is random for the moment. So forth. So I'm putting these figures here so we can use them in the next item we're going to cover. And so we also said with currency, so that you are able to differentiate the thousands and so forth and millions, we might need to do some formatting so that they have commas and decimals. So I'll show you that in a minute. So we will highlight the whole section and go to the home tab and select that comma. Okay, so we have, you can differentiate, like this number here is a little too much bigger than what I had intended. Which is 75,000. You can also include currency symbols if you need to. You see there is this one here. So we'll have dollars, pounds, euros, and so forth. But sometimes you will want currency for the country you're in. So sometimes you can get that from this format. If we went to currency, let's see if we can find the currency we are looking for. Kenya shillings, if you wanted Kenya shillings. If you do that, you will see it will pick Kenya shillings, right? So it all depends on what your requirements are. If you want to include a dollar sign, you will go there. And actually, the easier way to do that is to go to Format Cells, right-click Format Cells, then you pick currency, then you can pick the symbol you want. There's a big list here, including all sorts of different currencies around the world. And the decimal places you can also decide from here. All right. So moving on to the next one, I want us to calculate an allowance. Let me move this out of the way. I want us to calculate an allowance given that it is 45% of the pay. So 45%, remember we said all formulas start with an equal sign, then 45%, we can write it as 45 then percent times this one. That's one way. And people will already convert it to a decimal, so it equals 0.45. You can do that as well. Math makes sense to you. Same answer, but I prefer to just write the percent. So 5% times that. Then I can autofill this, as we said before. Right, so that's the allowance. Right, then the tax. The tax, it says calculate the tax given that it is 35% of pay. The tax given that it is 35% of pay. So actually I should make this pay plus allowance. So it is 35% of pay plus allowance. So that should be equals, remember we did some board mass before, so it is 35% times, open a bracket, this plus that, close the bracket for percent. So we have a tax, I can also fill this, we've done this type of thing before, and the net of course will be this plus the allowance minus the tax, we'll get net. Right. So I have some figures there. If this happens, it then means the text cannot fit there, so I just go between J and K and click, and it expands accordingly. Okay. So far we have done up to this. So let's see, create a column chart displaying names and net pay. Okay, so there are a number of ways to create charts. We can either start by highlighting everything. So insert, then it will give you some recommended charts. Sometimes you already know the chart you want, so you just go straight to the chart. So like in this case, let me go to a column chart. We will do pivot charts in another lesson, but let's try and just create. Let's see what they recommend and choose a column chart. This is a bar. I want a column. Try that again. This is a column I want. So you can either have a 3D column, it's entirely up to you. So if I have a chart like that, so it's like, now this is a bit of a problem. It's because I have used too much data. So if I move this to its own worksheet, I'll show you what I'm doing there in a bit. It's okay, but it has too much data on it. So sometimes I only want to compare like two fields. Like in this case, I only want the data containing the names of the people, first name and second name, and the net. Okay, so what I need to do is to go back to my chart and get rid of some of the data. So I'll check here and see the names of the fields. So if I do this and remove that, if I point this, you can see this is the net pay, this tall one pops up. So I want to get rid of everything else, and I want to only be left with net pay. So click there. This was what? This is tax and all tax. So this is a representation of the net pay. Okay, and I only want the name. If you look at this, there's a lot of data here as well. There is the department they are in, whether they are single, and their age, and so forth. But I don't want all that information. So I only want the name and the net pay. So to avoid all that, I could have started directly by selecting the fields I want to include on the chart. So let me delete this and show you another way. So I can highlight this. So I've started by highlighting the first name and the surname, which is what I want. Alternatively, actually, I could even combine this into one name. Suppose I wanted to have those combined. I insert a row here for purposes of displaying it as one name. So I can just do whole name. I can call this whole name. Then I use a function which I think we have not looked at. I do concatenate. This is short for concatenating. It's joining two pieces of text. So I'll do text 1. All right, then comma, text 2. So what I've done there is joined those two into one name. Let's see how it displays as one name like that. Suppose I want a space in between them, I can also include a further concatenation here and include a space. So I can click there, then I do something like this, space, comma. So it will have B3, then join it with a space and join it with the other name, then press enter and I have the whole thing looking like that. So that's a new function we have learned. I think we had not covered that in the other lesson. So you can join two fields. So what I want to now do is do this. I hold my control key. So for me to select the net, I'm holding down control on my keyboard. Right, let me repeat that. I'm highlighting the name, then hold down control on your keyboard, then click your left mouse button and highlight this. Sometimes if you're using a laptop, you're able to double tap here. Some laptops can do double tap and select. So what I've done there is pointed at net, then double tapped, then kept my finger down and drag downwards. That sometimes is a bit hard. So let's just use this easier method. Highlight this, hold down Control key, hold down the left mouse button and drag down without letting go the left mouse button. So you're able to select two fields, two non-adjacent fields. See, it's this one, and there is a bunch of fields between them and this other one. So then I can, if I go to insert, I still find my options. So I can now get this directly. So you see, it makes much more sense. Then I can move it to its own area, to its own worksheet by right clicking on it. So right click, sorry, I need to right click again. Right click, then move chart. Then I select new worksheet. I can give it a name. Let's say net chart.